Yo. What's up for everyone on the replay? I hope you're having a great Sunday. In this video, I want to share with you some stocks that I think are going to be great buying opportunities next week. I want to deep dive into these individually. So I'll give a stock portfolio update a little later in the stream, but let me just go over the watch list of stocks that I think are at great prices right now. And it's pretty much every stock on this watch list right here, all the way down to Uber. Uber is super cheap. I can't believe it. Uber, Meta, Microsoft, Futu Hood, AppLovin, and Amazon. I think those are the stocks to buy during the dip. And I want to go over one stock in particular you've probably not heard of before. It's not really talked about too much. I don't really see anyone talk about it, but it's ticker symbol FUTU, Moomoo. It's actually this app that I'm on right now, publicly traded. A lot of people know of Robinhood. I also have a Robinhood portfolio. So it's kind of just like a smaller Robinhood. This is what Futu is. It's this app I'm on, Moomoo. So let me deep dive into why I think this one is a better buy than Robinhood potentially. You notice it's not down as much. Like Robinhood's like down 50% off its all-time high, but this one's only down like 20. So let me show you why I think this one's a bit more resilient. First off, it has a lower valuation and potentially more growth, higher growth to the metrics. So if we look on the right, the forward PE is a 12. What that means is they trade at 12 times next year's net income. And check this out right here. This is the unbelievable part. And this is in US dollars. You know, the revenue's up 86% year over year after it grew 30. If we just zoom out on the revenue here, no wonder this stock has done so well. I mean, it's not just because of momentum. It's because the fundamentals have increased so much. This is not just the revenue. It's not just the revenue that's done this incredibly well. But check out the after-tax net income. You know, here's the before-tax number. Let me actually just zoom in here just so we can see the past 4 quarters specifically. The before-tax number was $501 million. After tax, they made $413 million. That's incredible. Here's the EPS projections. They expected 232. They did 293. And next quarter, they're expecting 270 and then 270. A nice increase. Still, there's going to be a great year-over-year increase. So brokerages make a lot of money from interest income. That's up 80% year-over-year. Incredible growth. And their brokerage commissions are up 90% year-over-year. And they sometimes do a yearly special dividend. You know, they did a $2 special dividend right there. But anyway, I can't pass up a 12 forward PE. Everything's growing. The number of users, their net income, the margins, like the DART, like everything's at a record. So anyway, that's why I really like Futu. I am a shareholder of this company. Full disclosure, I'll show you that here in my Webull portfolio. One of my larger holdings, I got 14 shares of Futu. I'm not even up crazy. You know, I'm only up 10%, but I really do like this name as one to buy the dip on. Is the market open tomorrow? The market is not open tomorrow because I think it's a holiday. Okay, so is Visa overpriced? Someone just asked. You know what? Let's go over Visa. And I actually think Visa is a really cheap price, believe it or not. The valuation is really cheap, and I'll dig into why I think this. There is one thing kind of hurting this stock recently, or the sentiment around Visa. The administration has recently proposed, has anyone heard of this, like a 10% cap on interest rates, or a credit card interest rate cap limit. That would obviously hurt their margins, I guess, down in the future. But let me show you why I think they're cheap. On the right here, Visa trades on the right on a forward metric, a 24 forward PE, which means they trade at 24 times next year's net income. That's a valuation I can get behind. You know, that's cheaper than the S&P 500, which trades at that's the green line. So the 28. So the S&P trades at a 28. On the left, they're at a 29, but on the forward, they're at a 24. So that's why I think Visa is a pretty good valuation. And check out their bottom line. This is what's crazy. This is their after-tax net income. They easily make over $5 billion of after-tax net income a quarter. So what's Visa doing with $5 billion of, you know, net income a quarter to play with? Well, they pay a dividend. They return some of that to you as a shareholder. They pay $1.3 billion a quarter in dividends. So what are they doing with all the leftover money? My favorite part about Visa is the share buybacks. They buy back 3 to 4 billion of their stock a quarter, which as the shares outstanding go down, it gives you more ownership in the company, it makes the EPS go higher, makes the dividend cost less. And as we can see, the net income's up by 14. but the net income per share, the EPS, is up by over 17 because they bought back 3% of the shares, and you get a near 1% dividend. And look how fast they raise the dividend every year, way faster than inflation. So this is a great stock. I believe will keep up and potentially outperform the S&P 500. You know, those small little micro credit card transaction fees that are slowly bankrupting us make Visa a lot of money. And the forward PE is a 24. Actually, that's another one I'm going to put on the watch list. Thank you for that one because they're cheap too. Visa is a very fair company. When did you buy SoFi? Well, actually, I bought SoFi a long time ago. I regret every share I've ever sold to them. I should show me like, where was it? Back here? Yeah, so I guess the first time was 1/13/2023. So January 2023 is when I bought SoFi, and I've kind of just been holding on ever since. This is another one that's at a pretty fair valuation. I think Robinhood's very good as well because they have growth. I look for companies like that are falling in stock price but still have massive growth in the terms of their fundamentals. So let me go over SoFi really quickly. Not financial advice here. Of course, none of this is. Just under giving my opinion. I sell nothing. So check out this. For SoFi, you want to look specifically at their financial services business because this is the metric that has beat all expectations. You can't make it up. Check out these growth rates in the middle. It's so impressive. It's up 76% after it grew 101, after it grew 141, after it grew 300. Like these are incredible year-over-year growth rates. And no analyst expected that. And we can see what the analysts expect. That's the orange line here. Check this out for the past 3 quarters in a row. They beat on revenue. They beat on net income, which is EPS. So everything here is headed in the right direction. This deserves some attention. Like SoFi is not just a popular stock because of, momentum. It really has good growth to the fundamentals. And that's what I look for, good growing financials, and they have it. And they make a couple $100 million net income. This was a one-time adjustment, so it looks like the net income's down 50%, but this quarter had a tax adjustment, so it didn't actually make that much. But anyway, you can see that from the analyst expectations. They still beat like crazy. So we're in a scenario where SoFi is just joining the sell-off of everything else, and they're getting to a valuation that I think it's worth buying into potentially right now as a small nibble. On the right, they're at a 29 forward PE. So someone said SoFi is a dilution of problem. So actually, not really. So as we know, whenever a company dilutes you, it makes the EPS grow slower than the net income. So check this out. The net income fell 47, but the EPS fell more. It fell 55 because they diluted you. Well, again, it technically grew. It was a record. This was a one-time adjustment, so forget about this. But EPS includes stock-based comp. So if they issue shares, because this is earnings, this is net income per share. So if they dilute you, it's included in EPS, and they beat on the EPS by a good chunk. They expected 11, they did 13. So that's why I also like looking at EPS because it's net income per share, which includes the stock-based comp. Because if there's more shares that exist, the net income per share goes down. What happens is, Pablo, the first link in my bio there. So very first link. So someone said FIX, you're going to sell FIX. I'm actually not. So if you look at my portfolio in the top left, it's called my buy and never sell portfolio. Once I buy stock in here, I'm never going to sell it. And this is one I'm not going to sell. We're up a crazy bit on them. We bought them over a year ago and we're up 265%. That's a huge AI beneficiary, huge HVAC and MEP play. So that's a mechanical and electrical work company. Okay, so let's look at some more stocks here. And again, here's my watches. Someone asked, these are all the stocks that I think are at great valuations right now. Visa, Amazon, AppLovin, Robinhood, Microsoft, Meta, Uber. Uber's a really good one. So let me actually go over Taiwan Semiconductor really quickly. I saw someone ask about that. Let's see. What up? Roland, good morning. Tommy, what's good, man? What is a good forward PE for a stock? It all depends on the stock. Ideally lower than their current PE. So we'll look at TENB and EVEL. We'll look at all these right here. Do you only trade U.S. stocks? Pretty much. I have like one ADR. Actually, it's not even an ADR. But I pretty much only own U.S. stocks. But I'm not opposed to owning other stocks. So here's Taiwan Semiconductor. This is a Taiwan company, actually. So we've converted the currency to U.S. dollars. So the metric we're looking at is in U.S. dollars to get a better idea. Here's why. Even though Taiwan Semiconductor is at an all-time high, believe it or not, I think the upside is still a good another 20, 30%. So if I was a shareholder, I would not be trimming. I would not be selling. Here's why. I know I sound crazy. They're not overvalued, even though they're at an all-time high. Well, here's my thesis. If we look on the right, the forward PE is a 25. If you look at their current PE of 34, you're like, that's pretty expensive. But a 25 forward PE implies that this could stretch up to, I believe, easily. It's like a 28, 29 forward PE before Taiwan Semi maxes out. Send this up another 25, 30%. So as we know, Taiwan Semiconductor, incredible moat. Nvidia and Apple just designed the chips. That's their two biggest customers, Nvidia and Apple. They just designed the chip. Taiwan Semiconductor actually manufactures them and makes the chips. So they have the number one market share by far, and it continues to grow, 71% market share. And check out the bottom line. And this is in US dollars. We've converted it. I can't believe it. If we zoom out here, no wonder this stock is at all-time highs because the net income is at all-time highs, which is EPS. And analysts expect the EPS to continue to climb higher. The EPS is going to go from 247 to 347. So there's still a lot more look at that revenue growth. It's the orange expectation on the right there. It's just so good on Taiwan Semiconductor. They just beat on every metric, and the metrics are expected to continue to climb higher. So no complaints here for me. 56% net margin. Incredible. So yeah, I wouldn't, if I was a shareholder of Taiwan Semi, I would not be trimming. Plus you get a dividend yield. Close to a 1% dividend. They raise it. I think they do share buybacks. Let's see if there's any news around them. They're investing in the US. Yeah, they're making their Phoenix, Arizona fab, and they've just completed, this was a while ago, but they already made their first ever Blackwell chips in their Phoenix fab for Taiwan Semi. Pretty cool. So yeah, let's go over Uber real quick. I saw someone saying Uber, and what up, that one, dude? Can you look at Spotify? Yeah, Spotify I heard is tanking too. Let's get to Spotify and Uber. These are popular ones, popular subscription names. You've all probably heard it before, Uber. And this is why I think you should potentially buy Uber. Every time you book an Uber now, you'll be happy because you're a shareholder. But Uber is finally at a valuation that is very fair and actually attractive, in my opinion. So on a technical point of view, they look oversold, but I'm not just recommending them because they're going down. They say don't catch a falling knife. I think this is a knife worth catching because Uber's quality. If we look on the right here, the forward PE, this is what's incredible. I don't see Uber going much lower. The forward PE is a 21, so they trade at 21 times next year's net income. That's so fair, and for a company that still has growth. So check this out. This is a cool metric. Their monthly active consumers are 202 million. That's up from 171 million. So not just monthly active users, but consumers are up like crazy. But check this out. Their main ride-sharing mobility business is up 19% year over year. After grew 26, after grew 33. So they're just continuing that streak of growth. It's just incredible. And not just the mobility ride-sharing, but the delivery business, which is Uber Eats. It's up 29%. After grew 19, after grew 6. So the growth rate is growing over here as well. So that's what's cool about Uber. They just had a record profitable quarter. So if we look on the very right there, this was this quarter record. It's never been higher before. Record net income and record free cash flow. Check that out. So it's like all the fundamentals. Every metric's at a record free cash flow, record net income, record user metrics, but the stock, there's like a disconnect because all of software is tanking. Uber just being included in there. I think this one's worth buying the dip on it. And, if you wanted Uber as 5% of your portfolio, you don't make it 5% today, but you go ahead and make it 1%. You start this dollar cost average. You start the nibble on them, I like to say. So a platform. Yeah, hey, Vader, the very first link in my bio there, the very first, if you want to get this platform, I'm on, my favorite app to buy stocks on. So yeah, these are my kind of list of favorite stocks. I'm going to go over one. I just bought the dip on like crazy in this portfolio. We're only up 0.75% on them, but this is Amazon. We've all heard of Amazon before. ETF in one, e-commerce play, subscription play, advertising play, real estate play. It's like a grocery store. It's like a UPS, Instacart, robotics play, AI play, all in one. Cloud play, yeah. AWS is huge. They're the number one cloud service provider. This business does over 130 billion of annual revenue for them. It's up 24% year over year. After grew 19, after grew 12. So it's actually the growth rate's growing on AWS, which is great news, and all their other businesses. And if we go to their profits right here, again, another one where Amazon just had a record profitability quarter, but the stock tanks. One of the reasons Amazon did fall is because they're guiding to spend a lot of money. If you go to their cash and investing activities, they're spending a lot more than they're making. They spent $47 billion this quarter, nearly $50 billion. They only made $24 billion. So they're spending a lot more than they're making. And they guided for just 2026. And just 2026, they're going to spend $200 billion on AWS, which means it's going to be $50 billion for the next 4 quarters in a row. Yeah, here's kind of that news there. Amazon plans $200 billion capital expenditure for AWS and AI infrastructure. And check this out. FCC approves Amazon's deployment of 4,500 additional Juniper satellites. Pretty cool. AWS secures multi-billion chip supply deal. Actually, one of the reasons Amazon's spending $200 billion is they're spending $10 billion a year on their new TPU business. And I think this is going to be huge for Amazon. A secret semiconductor play with their TPU business. Some customers could be like Meta. Because Amazon's customers are saying, we want chips that cost less but still do good. And Amazon's making their own chip for that right now, so they're spending $10 billion a year on that. Anyway, Amazon's an ETF in one. They always spend a lot more than they make, but the profits are at a record. You really don't focus on free cash flow right now for Amazon. You focus on their GAAP net income. That's what I think is gonna. Is that what you should look at there? Yeah, Google's making TPU chips as well. Um, I'm really bullish on the TPUs. So someone's been saying Roblox right here. I'll be quick about this one. I'm not actually too big of a fan of Roblox stock just because they don't make any. They're very far away from making any sort of profits. Let's see. They have some impressive metrics like their daily active users. Let me actually pull it up because I did find this impressive. Check this out here. Yeah, their daily active users are 144 million. When the same time last year it was 85 million. So apparently a lot of people are on Roblox. But here's the bad news, the one reason I stay away. Impressive growth on the metrics like the sales and the users, but look at this. I mean, they lost 320 million of net income just this quarter. They're losing like $1 billion plus of net income a year, and they've just kind of done that for all of eternity. And the bad news is they're really leveraged too. Like they nearly have the same amount of liabilities as assets. And how do you, pay off all this debt when you just lose cumulative more and more net income every quarter? So it's a tough one. They're not even close to profitability, and that's what scares me. It's because of their stock-based comp. Like some people be like, look at their free cash flow. Free cash flow doesn't include stock-based comp and non-cash expenses. So that's why you always look at the GAAP net income and kind of compare it to both. So the net income scares me. Yes, if you go to their EPS, there is no forward PE on Roblox because they're just so far away from profitability. So anyway, hopefully that was kind of helpful there. That's why I wouldn't buy Roblox. If I'm looking for a gaming stock to buy, I would much, much, much rather buy AppLovin on the dip. This is an incredible stock to buy the dip on, not financial advice, but let me go over AppLovin. I really think this one will impress you. So check this out right here. Simple metric. I mean, just net income right here. After tax net income. Like here's the before tax. It was 1.3. After tax was 1.1 billion net income. The net income growth is like just impressive. Like it's so incredible. Like that's why this one gets my attention because they really do have incredible net income growth, and the net income growth isn't stopping. Even the analysts don't see it stopping. If we go to the net income projections, like this quarter they expected 1 billion, they did 1.1. It's supposed to go to 1.18 next quarter and then 1.25. And historically they usually beat on net income. So the EPS / net income is going higher and higher. The revenue is too. Look at the free cash flow. This is like retained free cash flow, 1.3 billion of free cash flow. So they could do buybacks, acquire companies, potentially pay a dividend one day. That's why this stock is another one I find very attractive because there's a disconnect between the fundamentals and the stock price. They're just being, they fell on the Google, what was that called? The Project Genie news where they're making their own game. But AppLovin's an advertising company. So I'm a fan of AppLovin stock, and look at this valuation. You won't believe it. If we look on the right, they look expensive at 40 times PE, but if you look at them on a forward PE, which is just next year's net income, it's a 24 forward PE, which is cheaper than Google and potentially has higher EPS growth. I mean, like this is incredible, the metrics here. So anyway, that's one I'd certainly put on the watch list, and I not financial advisor, I'd like start buying them now at the 24 forward PE. Pretty cool. So yeah. Okay. Oh, someone said Meta. Ooh, bro, buy GTA 6 stock. Yeah, that one's TTWO. Maybe we'll check this one out right here. Yeah, they're in a unique position. Yeah, this is Take-Two. They're in this unique position where they have this asset, this game, GTA 6, where whenever they release it, it's going to bring them in billions of dollars and then billions in reoccurring revenue for the rest of the time or for the next years to come. So that's why you don't really look at their right now numbers because the right now numbers are really bad. Like here's their net income. Like all they've done for just years is lose a lot of net income, like $10 billion plus for the past couple years in a row. So you're really just waiting for them to see how GTA 6 does, because whenever that released, it's pricing in the future growth of that. I'd be careful with that one. Yeah, hey, Nawaf, if you want to get this app, I'm sorry if I said your name wrong. It's in the link in my bio, the very first link there. If you want to get this brokerage I'm on, it's an app where you buy stocks on. So, okay, ServiceNow stock. All right, let's do ServiceNow. Oh, and I forgot to look at some of these stocks. I'm so sorry. Yo, Zero, are you still here? And Rolando and Tommy? My bad, Rolando. Let me know if you want me to look at TENB. Okay. So here's ServiceNow right here, a huge software name that's one of the ones being hurt the most by the software sell-off. They're still kind of pricey even on the sell-off, like just on a forward PE basis, but it's like they're having this year's 40% growth. So it's, you really look at a PEG ratio, but on the left, they look expensive at a 64, but forward PE is a 45, which is still a little expensive, like Salesforce a little cheaper, but this one still has great metrics. So here's their net income, the bottom line. They're easily making 400 to 500 million of net income a quarter, plus free cash flow. Yeah, the free cash flow was incredible. 2 billion of free cash flow, and then they netted 400 mil. And I think, they're investing a lot into the future right now. Let's see if there's any news around this company specifically. Goldman Sachs warns software stocks face AI disruption. So yeah, that's kind of the thing. ServiceNow is facing this like AI thesis disruption. I don't buy it yet. I mean, they had good numbers. I mean, they slightly missed on net income. I mean, analysts expected 471. They only did 401. I mean, not too big of a deal because they beat on revenue, but it's maybe still has a little bit more farther room to fall at a 45 forward PE, maybe to like a 38. But I mean, it's still a quality one. I do like ServiceNow, but I'd keep the allocation still to that one kind of small, just because how the market is right now. You like just with any stock right now, you don't want to fully buy the dip on anything. Slightly buy into them. Microsoft, yeah, let's do Microsoft real quick because this one is one of my favorites right here. Yo, what up, Craig? And Day Zero, good to see you. Didn't the office catch on fire for the devs of GTA 6? Is that true? What up, Native? I did not know that. So here's Microsoft right here. This is, everyone's heard of Microsoft. Every S&P 500 company uses Microsoft in one way or another, or a lot of their top customers do or something. So I really can't believe how cheap Microsoft is. Like, I can't see Microsoft getting much cheaper. Like, this is one of my favorite and most like recommended stocks to buy the dip on, like not financial advice. Like it's just one of the safest place to just deploy. Like it's easy money to be made here. I really feel like now, but like if we look on the right, the forward PE is a 22. Like for Microsoft, that's so crazy. This is a great company, like an ETF and one. They have this big software business, think of Excel, Office, OneDrive, all that. That does over 120 billion of annual revenue for Microsoft. And it just hits a new record every year, every quarter. Just really great double-digit growth every quarter. And not just the software, but their cloud business, their Azure Cloud, Intelligent Cloud, that also does over 100 billion of annual revenue for Microsoft. It's just so good. And if we go to their net income right here, they had a slight one-time adjustment this quarter. The net income was only around 31 billion. It was still a record, but it was slightly higher to 38 billion because they took a one-time realized capital gain on OpenAI. But anywho, just great net income growth on Microsoft. Even ever since Bill Gates stepped down as CEO, the software business continues to grow. And one thing being questioned, though, is how much Microsoft is going to spend on AI. I believe they said they're going to spend like 150 or maybe it was $200 billion just in 2026. So that means that they're going to be spending like 40, 50 billion a quarter. But let's see here. High temperature semiconducting cables for data centers. Okay. Microsoft develops in-house AI models to reduce OpenAI dependence. Okay, so maybe they're going to start making their own LLMs, buy a bunch of chips and stuff. But anyway, I think Microsoft's just such a great buy. Like you really can't go wrong on Microsoft. Yeah, just pay. Here's the non-adjusted number: the earnings before interest taxes, 38 billion, and it's supposed to continue to climb higher. So anyway, Microsoft, great company, 22 forward PE to steal. Ooh, another cheap company. Yeah. Ooh. Netflix. Yeah, let's do Netflix because this one's another great advertising stock, in my opinion. I think it's a steal of a deal. To start nibbling, to start dollar cost averaging on this stock right here. Everyone really likes Netflix, or some people are boycott Netflix. I know that was kind of a thing recently, but a lot of people would cancel their Netflix subscription last if they had to cancel something. So hey, if you use Netflix, why not own some of the stock as well? Especially because they're at a cheap valuation currently on the right. They're at a 24 forward PE, which is like the cheapest they've pretty much been at like ever. One of the cheapest valuations, simple to understand business. They have 300 million premium subscribers, and each subscriber makes Netflix on average $11.69 per month per user. Pretty impressive. And here's their after-tax net income. They easily make 2 to 3 billion of net income a quarter. and they don't pay a dividend. So what are they doing with all this net income? Yeah, and free cash flow, making $2 billion plus a free cash flow quarter. What are they doing with all that? Well, one reason why Netflix is selling off is because Netflix is trying to acquire Warner Bros. Discovery for $83 billion. But Paramount is also trying to buy them, and they're bidding up $108 billion in offers to cover Netflix breakup fees. So there's like this bid going on for them. Like it's already decretive to Netflix's EPS if they buy them here because they're using stock. So the more the price of Warner Bros. Discovery goes up, the more decretive it is to Netflix's EPS. But whether or not to do the acquisition, I think Netflix is a pretty good buy. The risk reward looks very attractive on Netflix, in my opinion, at a 24 forward PE. So yeah. It'd be kind of cool to get the Warner Bros. Discovery stuff like Harry Potter on Netflix, I guess. Okay. Want your opinion on DeepSeek's new version could affect the market, leading to Nvidia? Yeah, hey, I don't really have much thoughts on that. I don't know. I remember the first DeepSeek moment was really big, but ever since then, it's kind of just fizzled out. So I'm not really paying too much attention to that. Someone said Micron stock. Yeah, this is your memory shortage play. My brother was just trying to buy an external hard drive, and he's like, "Dang, these have gotten so expensive." And I'm like, "Yeah, there's like a memory shortage right now." It's kind of funny, but yeah, it's 20. There's Micron confirms they're sold out through 2026. Expects RAM prices to rise 176% in 2026. So basically, there's this huge memory shortage because of AI, GPUs and storage taking up all the memory chips or memory. So Micron is a huge beneficiary of that. So even though the stock is at an all-time high right now or pretty close to it, here's why if I was a shareholder of Micron, I would not be selling or trimming Micron. Because they're actually, believe it or not too expensive on a forward metric, a 10 forward PE. So they literally trade at only 10 times next year's net income. So we can see that right here. Check out these net income growth projections. 2 quarters ago, it was 1.8 billion. It's supposed to be 9.5 billion next quarter, and then 11 billion the quarter after. I mean, this is incredible EPS growth expected. I mean, like 1,000% EPS growth we're going to see. So no wonder Micron stock has gone up so much, and it's not even crazy expensive at a 10 forward PE. That's the thing. Micron, I really feel like could stretch up to like a 13 forward PE, send us up another 30%, but like kind of easily before it really maxes out. So yeah, Micron, I'm not buying it here, but if I was a shareholder, I wouldn't be selling. Actually, pretty interesting. Iris Energy versus Nebius. So yeah, these are like Bitcoin mining companies that are like converting into cloud hosting companies. So I still believe a lot of the revenue comes from crypto, or I don't know. Oh well, yeah, look at that. So what does Iris Energy do? And here's why I'm not too bullish on the data center stocks, because there's nothing. And I don't mean to be bearish on your stock there, Lopez. Thanks for being here. Good to see you. This is a data center stock. Basically, all this company does, nothing proprietary, they just own a bunch of GPUs, a bunch of Nvidia chips in a data center. And what are they doing right now? Well, they're just mining Bitcoin. So 90% of this company's revenue comes from their Bitcoin mining revenue. But right now, they just got massive deals. I believe like a massive deal with Microsoft. I don't remember, but I'm pretty sure it's Microsoft. Microsoft needs to rent out the capacity of Iris Energy's GPUs for their Azure cloud. So they're basically, instead of mining Bitcoin with these GPUs, they're going to be renting it out using the capacity for Azure's cloud. So that's kind of what this company is right here. I don't love the super long-term thesis on this one because there's this whole depreciation with the chips. They're doing this because Microsoft doesn't want to take on that liability. Because it's kind of smart by Microsoft because they know everything's inflated, the prices right now with the shortage and stuff. So if they rent it out, it's maybe cheaper in like a couple of years and they could build it. I don't know. But yeah, there you go. Hopefully that was kind of helpful there. Bitcoin mining company. Hey, what up, Two Trick? The first DeepSeek was a buying opportunity of a lifetime. I took advantage. It was this day right here. Comfort Systems, the first day, no earnings day. This was the DeepSeek day. This is the first time I ever bought Comfort Systems, was the day after the DeepSeek day. Comfort Systems went from 550 to 406. And I'm like, this is my chance. I'm going to buy them. So I bought them. Then they fell more. Then they fell more. And I'm like, oh, maybe this is the bottom. But then, oh, wait, that was, never mind. Anyway, I still remember that DeepSeek moment. Okay, let's see here. Hims, yeah, Hims is ooh, and someone said Toast. Actually, I do like Toast. That's that restaurant payment provider company. Well, let me go over the software. This is one of the software names. They're also falling because restaurants are falling. You look at Wendy's or, Jack in the Box or Red Robin, or a lot of restaurants right now are struggling. And this helps out small, medium-sized restaurants, like with like that tip machine, the point of sale system, all that. So what I do like is they're finally profitable. If we go to their net income right here, if we zoom out, like it used to be a tough buyback here, losing a lot of net income every quarter. Well, now they're printing money. Check that out. They're easily making, over 100 mil in net income a quarter. And at this growth rate, what's it going to be the same time next year? Let's actually see the net income projections. Yeah, they beat crazy. See, so it's not like Toast is falling because they're missing like crazy on their earnings. Like, no, they beat on net income. They beat on revenue, beat on net income, beat on EBIT. So, and the expectations are it's supposed to go from 80 mil to 122 mil. So it's supposed to stay over 100 million a quarter. They have a really good balance sheet too. I believe no net debt on Toast. And they're not crazy expensive. If we go to their forward PE, it's at a 34. And they kind of just got net income positive. So this 34 forward PE is like pretty attractive. And you almost want to do like a 2-year multiple. So this one is one I do like. But we are just watching like look at Wendy's, for example. Like this restaurant right here. RIP, like almost like the lowest it's ever been. So actually for Toast, let me show you the website right here. I've actually made a few YouTube videos about this stock before. I used to own them. I've done a lot of deep dives. Can we go check out their website, please? Well, if it doesn't work, then oh well. All right. I got into Chevron. Pinduoduo. Hey, that's Temu stock. You know what? Maybe we'll do Temu. Let me do that one real quick because we haven't done any ADR stock. So this is a Chinese stock and ADRs. This is PDD Pinduoduo. So yeah, if you've heard of Temu before, this is the company that owns Temu. So here's their active users. They have 750 million monthly active users. That's kind of cool. And they're really profitable. So this is in US dollars. We've converted it from Chinese won to USD, and check this out. They really are making like a lot of net income. It was a tough buy. No one bought the stock in 2020, but that's when Temu didn't exist. But Temu is huge now. So they really do make in US dollars like 3 to 4 billion in net income a quarter. Really good balance sheet. How about the free cash flow? Yeah, cash flow looks good too. What's the forward multiple? Yeah. So Chinese companies always trade cheap, but yeah, Temu at a cheap valuation at a 9 forward PE. Oh, Morningstar covers this one. Narrow moat. If you like Pinduoduo, you'll really like Amazon too. But yeah, not too bad. It's a really cheap valuation. They could pay a dividend and it would be a really high yield and not cost them much. The stock's been flat for a while. I wonder if that has to do with tariffs and I don't know. Wendy's says they are closing a bunch of stores. Wendy's is closing 6% of all the US's restaurants, they announced this quarter. It's weird. So we just saw Wendy's stock. Oh my goodness. I actually just logged out of my account. I mean, that's unbelievable. I have to relog in real quick. I can't believe I just did that. I don't know how, but let me log in. I really apologize. Give me just 10 more seconds. All right, I'm already logged back in. Okay. I'm screencasting again. We're back. Don't worry. That was my bad there. Okay. Please connect. Okay, there we go. What were we looking at? I don't remember. Pinduoduo. Oh, Wendy's. Yeah, Wendy's stock. Yeah, RIP Wendy's. Let's see if there's no news over it. But yeah, we can see Wendy's stock is doing terrible. So Wendy's is at like an all-time low. But look at McDonald's stock. Huge difference. McDonald's stock is at an all-time high because the business models are completely different. McDonald's really isn't a restaurant. McDonald's, the corporation, this parent company, is actually a real estate and royalty company. For all the franchises, if you go spend any amount of money at any franchise, 4% of your transaction goes back to this stock as a royalty. So 4% of every sale goes back to this stock as a royalty, and they own the land under 80% of all the stores. So they're collecting rent and royalties from all these stores. That's how McDonald's has a crazy, 30% net margin, because no restaurant has that. It's because they're not a restaurant. They're a real estate royalty company. They're almost like a pseudo REIT. They are a REIT, just not classified as one for tax purposes. What happens? Yeah, hey, Ala T, it's in the link in my bio, very first link there if you want to get this app I'm on. It's at Brokerage, my favorite app. So Let's look at some more stocks here. Symbiotic for robotics. Yeah, this is a great robotics name. My second favorite robotics name behind Amazon. So this is a warehouse robotics. I'm really bullish on warehouse robotics and, help out the logistics of Walmart and all these big warehouses. And their largest customer, Symbiotic, is actually Walmart. Walmart loves them, and Walmart loves them so much that they decided to buy the shares here. Walmart owns 12% of the entire company of Symbiotic, which is pretty cool. And I've looked at a lot of robotics names, like a Rich Tech Robotics and a Serve Robotics. Like, they have no revenue, and to be honest, I don't love them. I would not buy either of those stocks really, but I really like Symbiotic because they have real revenue and real growth. They literally did 630 mil of revenue, up 30% year over year. Great metrics there. And check out the look, they're supposed to go net income positive. They're supposed to make 50 mil in net income, 20 mil, revenues going to 700 million. So I'm really bullish on them. They have over 1,500 IP and patents. So if you're wanting a real robotics play with like a real future that's way ahead of like all their competitors, check out Symbiotic. Don't buy Rich Tech Robotics. So buy SYM. There you go. McDonald's is strong and didn't go down in the last rug pull. Yeah, exactly. They're like a defensive name almost. McDonald's has seen this recession. They didn't dip because there was no dip. McDonald's didn't fall that year because McDonald's historically in a recession, the sales go up. People go to McDonald's more, and McDonald's in a recession acquires a bunch of cheap land because they're a real estate company. Anyway, I'm totally biased. McDonald's actually is now my largest holding since all the tech has been falling. Google fell below McDonald's, and they hit an all-time high, so they're my largest holding now in here. Oh yeah, same with another kind of defensive sector is HCA Healthcare, my hospital play. They just hit an all-time high. The defensive kind of sectors like healthcare, utility. Yeah, utilities just did really good last week. The regulated utilities like a Southern company, NextEra Energy, all hit an all-time high. NextEra Energy, Duke Energy. Yeah, here's my Southern company right here. Regulated utility with a 3% yield. 3% yield, and it has good stock price appreciation. That's what's cool about these regulated utilities. They always give you like 7% of your money back. Oh yeah. Another healthcare name I like is AbbVie. Actually, I almost want to go over AbbVie. I'm not loving the insurance names like a UNH and an ELV. Yeah. Okay, I'm missing out. My bad if I'm missing some stocks here. Actually, Hiatus said NUTX stock. Let's try this one out. So Nutex Health. Okay, they're actually on my watch list. I think this might be another hospital group. I actually don't remember. What's the market cap on this company? So they're only worth 700 million. So just beware in the top right. They're only worth $705 million. So yeah, it is a hospital group. That's why I remembered them. And they have great numbers. Like really great numbers. Check it. And the net income projections are great. So the forward PE I think is super cheap. Let's see here. Yeah, that's why I found this one attractive. On the right, they're trading at 5 times next year's net income. I mean, you're pretty much buying the growth for free. I mean, 5 times next year's net income. They just acquired these hospitals, so that's why their revenue just grew so much out of nowhere. So actually, I'll pull up a quick slide from their investor presentation. I believe they have right here. 27 hospitals are quality. So basically like a hospital play. Actually, I'd like them. I don't know why they fell because the other hospital stocks like HCA Healthcare and Tenet Healthcare all just hit all-time highs. So 1263. Yeah, hey, if you want to get this app I'm on or brokerage, it's in the link in my bio, very first link there. If you want to get this brokerage I'm on, affiliate link, full disclosure. But yeah, my favorite app to buy stocks on and stuff. So what was this other stock someone said? McDonald's will never go broke. Yeah, I agree. How do you feel about winning on your Seattle prediction? It was all right. What's up, Craig? Yeah, I forgot. I don't love doing predict. That was the only prediction market I've ever done. I did on the Super Bowl, and we did win. So that was fun. Someone said TradeWeb. Yeah, this one's actually a pretty cool stock. No one's really heard about this one. I actually heard about I was watching CNBC or TV, and they had like a chart pulled up, and it said provided by TradeWeb. So I just went on my brokerage and typed in TradeWeb, and I'm like, oh shoot, they're a stock. So here's their stock right here. Actually, I really like this company. Great fundamentals. They have no debt, so I'll kind of start with the balance sheet here. No debt. Debt-free company with over $2 billion of cash. Look at that cash pile just grow. So well over $2 billion of cash, and here's the bottom line. they're just adding more and more net income every quarter. Easily 2 to 300 million of net income a quarter. So yeah, if we also go to the free cash flow right here, yeah, these year-over-year growth rates look incredible. Yeah, hey, 1263. This is a brokerage link in my bio, very first link there. 1263 for the app I'm on. It's a brokerage called Moomoo. So yeah, TradeWeb anyway, 31 forward PE. It's kind of fair for the growth that they have. You get a dividend. Look at that dividend yield and the payout ratio. So a 0.5% dividend yield and only a 13% payout ratio. So that's what's kind of cool about TradeWeb. They do have nice growth. Let me actually just look at the EPS growth. I want to see that over time. So EPS right here. Yeah, this quarter specifically was incredible. This must have been a one-time adjustment. Let's see at the non-adjusted numbers. So yeah, here was so they did have a one-time adjustment this quarter, but it was still a record profitability quarter, even when we exclude the little one-time adjustment that they had to their net income. So yeah, they deserve that high multiple because the fundamentals really are impressive. Yeah, that's TradeWeb. What do you think about Nvidia? Do you own any shares? And what is your long-term view? I actually do not own any Nvidia shares, but I am really bullish on Nvidia and their current valuation. So, someone says my dog's name is Moomoo. My dog's name was Moomoo. That's so funny. What's up, Vader? So Nvidia right here, this stock is cheap. I can't believe it. Nvidia is actually very fair in terms of evaluation right now. And that's why, not financial advice, I think if you buy Nvidia right now at current prices, you should get around 8 to 10% of your money back every year on average for the rest of the time. You won't. It's insanely easy. Double days are over because if you look in the top right, it's almost like impossible to triple your money anytime soon. Like if you look in the top right, the market cap is worth 4.45 trillion. For you to double your money, they have to be worth 9 trillion. It's just a tough double in terms of law of large numbers, but I still think it'll give you 8 to 10% of your money back a year because they are very fair in evaluation. Let me show you the valuation I'm talking about. If we look on the right, the forward PE, and on the left, the PE, they look expensive on the left, a 45 times net income, but on the right, they trade at 27 times next year's net income, which is super fair for a growthy name like Nvidia. They sell it's like the picks and shovels play, this whole AI craze. They sell the GPUs, 24% PC GPU market share, and check out the net income projections. This is where they get the 27 forward PE from. The net income is going to go on the left from all the way down from 18 billion all the way to 38 billion year over year. They're literally going to be doing close to 40 billion of net income a quarter in 2 quarters. Like, it's that insane. If another company can pull off this sort of net income growth, they also deserve to be worth 4.5 trillion. Like, no other company can do this. It's so hard to do. That's why they're the world's largest US market cap company. 32 billion net income just this quarter, and it's going to 38 billion, which would be more than any other Mag 7 has ever done in 1 quarter of real GAAP net income. So anyway, incredible on Nvidia. I have nothing bad to say. I think you still get good returns if you buy it today. All right, and if I was a shareholder, I wouldn't sell Nvidia for sure. Ooh, so Edge said PXHE stock. All right, let's check this one out. I can't find this one. Are you talking about Phoenix Energy? This is like a bond, I think. Yeah, preferred shares. I think this is a bond. I wish I could, find that stock for you. I apologize there. And if that was, wait, PHXE, maybe PHX Energy Services. I can't find that one. I did try and find it, but there was no metrics or things for anything to look at. If you have another stock you want to look at, let me know. Oh yeah, Chevron. You know what? You know who also owns Chevron? You know who's going to be happy about me going over this one is the homie Warren Buffett. So here's Warren Buffett's portfolio. A lot of people know him for his dividend stocks like Coca-Cola, Bank of America, but 7% of his portfolio is in Chevron, and I think Chevron's near an all-time high. Yeah, look at that. So I love oil stocks. There's like a nice diversification and hedge into like a tech sell-off. So normally oil, you're not going to outperform tech, the tech-heavy S&P 500 in the long run buying an oil and gas stock. You're just not going to outperform. But what you do get is a nice diversification and a qualified dividend in the meantime. Like every year, the yield's lower now because the stock price is so high, but normally you're getting like 4% of your money back every year just in a qualified dividend, no matter what the stock does. So you get 4% and you get around 4% dividends, and you're hoping for like 3% stock price appreciation for a total return of 7% a year. And it's done great. I probably wouldn't buy Chevron today, but I do love oil as a small percent of your portfolio. and it makes good income too. All right. Oh yeah, Spotify. Forgot to get to Spotify. My bad there, that one, dude. Yeah, Spotify right here. So this right here, we all know Spotify. It's like that music app. It's kind of a commodity almost. Like I actually use YouTube Music. I used to have Spotify. Then I had Apple Music, but then I switched to YouTube Music because it came in my YouTube Premium subscription. So I use YouTube Music now. It's kind of like you can get your music app from anywhere. My brother found some app on the App Store where you can just listen to any song with no ads, and it's like a Spotify replica. I'm like, dang. But let's check out. That doesn't matter because they still have great earnings. Spotify implements price increases in U.S., raising premium plan to $12.99. Does anyone pay for it? What is your current price right now? The price represents a $1 increase for premium plans in those markets. Okay, so let's see. They have a bunch of premium subscribers. Here's their exact number. It's cool. We get it. They have 290 million premium subscribers. Pretty cool there. Premiums 90% of the revenue. Oh, they made great net income. Check out the expectations right here. They expected 711 million and they did 1.4 billion. And the revenue is supposed to go up and up. The only bad part is they don't actually own the music. So every time there's a price increase, a lot of that goes to UMG and royalties back to the people who actually own the music. So, Universal Music Group actually owns all the music, so they pay royalties back to them. But this was a great. Basically, here's their profits. Record profitability on Spotify right here. Um, yeah, I know they're like implementing into like Discord and a bunch of different things as well. I just like YouTube Music. I just look at that other countries. So the U.S. is only 37% of the revenue. I actually thought it was a lot more for some reason. So the U.S. is only 37%. Other countries are 62%. So anyway. Yeah. Oh, wow. Wow. Spotify. That's incredible. They're actually at a 28 forward PE. That's actually insanely cheap. I've never seen Spotify that cheap. Every time I've looked at them, they've always been in like the 40s and 50 forward PE. So 28 forward PE, actually, that's really fair. I didn't know that one, dude. I appreciate that. Yo, shout out the member, the legend, Brian Paul. He said Eaton right here. This is an electrical infrastructure play. I'm actually really bullish on this one with the whole CapEx spend of the Mag 7, like Amazon, Microsoft, Google spending like $200 billion just in 2026. This should benefit Eaton and a lot of other like AI ecosystem plays. Plus, you get a nice dividend. So the stock is at an all-time high on that news. And even at all-time highs, you still get an over 1% dividend yield. Not too shabby. The forward PE is not crazy. I mean, a 31. I mean, they are at an all-time high. So yeah, 31 forward PE. Not too shabby. Here's kind of their net income. Oh yeah, they're a bit of an aerospace and defense play. Check this out. Their aerospace business is 15% of all their sales. That's actually at a record, $1 billion, 1.08 billion revenue. Yeah, it's never been $1 billion before. Pretty good numbers on Eaton. Good dividend. Good net income. Yeah, if we just zoom out on the net income. Yeah, record net income this quarter. And I'm assuming with all this AI demand, it should only kind of go up. Yeah, they're making $1 billion of net income a quarter. Pretty cool. And yeah, here's the projections here. So not too shabby. Yeah, look at the revenue in 2 quarters. Supposed to be 7.64 billion. Are they like buying a company? No, or anyway. Let's see if there's any news down here. Not really. Okay, pretty cool. I do like them. Send said, which app is this? Yeah, when you get this app I'm on, it's in the link in my bio, the very first link there, Brokerage, where you buy stocks on. It's free. So let's see. Nathan said Monday starting to look interesting. Yeah. What's your favorite software stock? That's a good, it's going to be such a boring answer, but I really like, this is a list I was going over at the beginning. These are my favorite stocks I think are the best to buy the dip on. Everyone on the screen, all the way down to Uber. Uber's a steal. Meta, Microsoft, Futu, Hood, AppLovin, Amazon, and Visa. These are like great stocks. GSNT said HCA is going wild. Yeah, I know that. Thanks, GNST. Yeah, that one's been pretty crazy. How much did you win on the Super Bowl? Like $10. It was. Oh, I kind of hyped that one up. Yeah, I never recommend really doing the prediction market stuff. But you know what? Speaking of the prediction market, I want to go over Robinhood stock because I did. Someone said that a second ago. I'm also a Robinhood user. So Robinhood, ticker symbol Hood, is just this app right here, publicly traded. And yeah, look at this. These suckers, they moved prediction markets to the top of the whole brokerage. So it used to be like way down here, but they moved it to the top. Like they're really pushing people to do prediction markets, which I never recommend doing. If I'm gonna bet my money somewhere, I'm gonna do it in stocks because I like the risk to reward and buying the dip on great companies. I'd rather buy Robinhood the stock. So one thing I love about Robinhood is how much they're making from these prediction market contracts. So here's right here, their actual, where is this? Event contracts traded. So prediction market contracts traded. This is month by month data here, which is pretty cool. This is when they created it. They had 300 million events traded. Prediction market traded. Now it's 2.9 billion just this month, or just for December. And so you can kind of take the 3 quarters. So these prediction market contracts make these brokerages a boatload of money. So whenever you go buy a stock, they make a 0.1% fee, but on a prediction market, they have a 2% fee. So it's 20x more valuable for the bottom line. But one reason why Robinhood did fall on their earnings report is because their crypto revenue, crypto trading volume actually fell 30% year over year, which is odd. So the crypto revenue fell 30, but it's kind of offset by this incredible prediction market growth. So that's what I love about Robinhood, and it's printing the money. You won't believe their bottom line in the margins. It's incredible. The revenue was 1.28 billion. Out of this 1.28 bill of revenue, they kept in net income 605 million. That's after they paid 50 mil plus of taxes. They kept 605 mil of net income, which means their net margin is a 47%. And again, this was a one-time adjustment back here. They didn't actually have a 90% margin. They didn't actually make 900 mil in net income. Here's the non-adjusted number. Record profits on Robinhood. I genuinely can't believe how great it was. So that's why if I was a shareholder, and I am a shareholder of Robinhood, I would not be selling Robinhood. I'd be looking to buy more of them, and they're at like a 32 forward PE. So that's kind of my thesis on Robinhood stock. Full disclosure, I love the whole brokerage industry. I'm a shareholder of Robinhood, ticker symbol Hood. I'm a shareholder of Moomoo, Futu, and I'm a shareholder of Webull. I own all three of the stocks. I own all three of these brokerages stocks. So here's my Webull position. This is one of my smallest positions. I have $400 in Webull. We're down 27% on it. But yeah, okay. Let's look at some more stocks here. Yeah, Webull. Yeah, hey, Webull stock as well. Someone asked for it. It's same thesis. Webull is. This is a great tag along to what I just covered about Robinhood. Webull stock is copying Robinhood in their successful results. And so because of that, I've been using Webull way longer than Robinhood. I've had Webull since like 2021, and my portfolio's done terrible. We're only up like 7%. Don't tell anyone, but yeah, we're not doing too well. But what I just noticed, and this, you see how it says in the top right, new, it says predictions, new, crypto, new. They just added in crypto and prediction market, and that's where they make a juice of a commission. So that's why I'm extra bullish on Webull, more so than the analysts are. So I bought a little bit of Webull. Even though Webull's at an all-time low, ticker symbol bull, they have a weird share structure. I would not have this one as a meaningful size position. Robinhood's definitely the better buy, and then Futu's the even better buy potentially. But I still like owning them because I'm more bullish than the analysts are. But even at all-time lows, they're still a little pricey and a little expensive. Can you go over your safe never sell watches? So yeah, here's this right here, safe never sells. It's kind of small right now, but yeah, it's just kind of some safe names like McDonald's, Waste Management, BlackRock, HCA Healthcare, AbbVie, Microsoft. My good high yielders too. Hidden gems, zero debt. Oh yeah, here's my watch list of stocks with zero debt. Actually, I shouldn't even go over this because most of the stocks that have zero debt aren't even that good, and I wouldn't really own them. But some of them are good, like Palo Industries, Reddit. Oh, Reddit. Okay, so let's look at some more here. Dino, good to see you, man. It's been a minute. He says, booking.com. This is actually a really cool stock. It's like the Uber of like travel. So every time you like book an experience through them, they just collect a high margin fee. Dang, they've tanked massively these past couple weeks. So are they finally at an attractive valuation? No way. I might even put this one on my watch. It's on the right there. This company's at a 16 forward PE, which so they trade at 16 times next year's net income. Let's see, they have so they say Booking has a wide moat, successful expansion into payments, flights, alternative accommodations. So yeah, let's see what the bulls are saying here. Bulls say emerging markets, mobile application usage is up. Okay, actually, I don't want to read all that. Let's go look at the profits here. So here's their net income, and it's phenomenal. Just this quarter, they made 2.75 billion. That's after tax. The before tax was 3.9. After tax was 2.8 billion. So they really do make crazy net income. That's insane. What's their gross margin? So this is red. Oh my goodness. Okay. Well, 30% net margin. So because they're like a royalty company, you don't really, these liabilities don't really matter. I've looked at them before. Oh, they do massive share buybacks. Yeah. One of the things about booking.com is I remember them doing massive share buybacks. Let me pull it up. Oh yeah, they pay a dividend now. The dividend costs 300 million a quarter. Since it costs so little, the real winner is check out the buybacks at the top here. Yeah, it was crazy back a year ago. This is in the billions. They're doing 2-3 billion of buybacks a quarter because they can afford it. They made 3 bill just this quarter. So actually, I really like this name. Incredible margins. Yeah, I have nothing bad to say about that one. A 16 forward PE. This is another one I'm actually going to put on the watch list. Another good one to buy the dip on. Quality name. I mean, really quality. Xena is my favorite drone play, expanding all across the US. Let's check out Xena, and then we'll do TENB. No, my bad, Rolando. That one's next. For sure, next we'll do TENB. Then we'll look at PWR, Salesforce, S&P Global. What's up, Hector? 6-star. I'm sorry if I'm missing out on some of these stocks. So I apologize. I'm trying to get to all these. And hey, shout out to Anna May. Hey, that's a clever name, Anna May, for the rose there. I do appreciate that. So here's Xenatech. Someone said it's a drone stock. Unfortunately, the stock has not done too well. What's the valuation? So they're a very small company in the top right. They're only worth $133 million, and they're a Canadian company, so we'll convert it to US dollars. So drones as a service. Revenue is, so they do have revenue. Basically, they're getting their first ever sort of revenue. So they did 3 million of revenue, very small number. That's why the year-over-year growth rate looks so insane. 1,000% growth rate, but it's comparing from small numbers. But 3 million of revenue, analysts are expecting it to go to 4 million, then 5 million. So yeah, that's 20 million of revenue a year, and they're only going to be losing 3 million a quarter. They did lose a lot more. They lost 8.8 million. So we do want to watch the losses because remember, if you lose $8 million and the whole company's only worth 130 million, that's a lot. That's like a lot of money. That's like a couple percent of the whole company. A couple percent of the whole market cap is lost just this quarter in net income. So we do want to watch that. But some sort of really small drone play, you're going to be really careful. You don't want to have that as a major size position. Yo, no way, dude. Puck, the legend, Puck, with like 20 roses. Dude, I appreciate you, man. If you got a stock you want me to look at, let me know. I'll definitely check it out for you. Someone said, T and B. And then I saw CRISPR Therapeutics and some of these other ones. We'll check them out. PWR, S&P Global. So here's Tenable Holdings. Dang, this one also is sold off these past couple of weeks here. Let's see if we can figure out what happened and what they do. So they're worth $2.67 billion. They 55% of the revenue comes from the US. What do they do? So it's a cybersecurity company. Okay, cyber exposure. Okay, let's check out their revenue. Let's see how good that is. So the revenue is up 10% year over year. If we zoom out, okay, that's kind of what you want to see. The revenue's in a straight line up. It's actually a new record every quarter. So that's good to see. But are they profitable? We'll check that out. So the revenue's up 10%. And they're actually just now getting net income positive. And actually, they made money. Look at that. This is the before tax, before interest number. Okay, so they do have some debt they're probably paying interest on. But before that, I mean, they really are just now getting profitable. I'm sure like by this same time next year, they're actually going to be making like GAAP net income every single quarter. So that's something. Yeah, they made net income last quarter and they only lost 700K this quarter. So they're just now getting net income positive. Interesting. I do kind of want to see the revenue grow a little faster, just over 10%. I would like to see it grow a little more than just 10%, but anyway, yeah, I guess they're just being caught in the software dip, and they're still expensive just because they just now got net income positive and are just getting net income positive. The forward PE on the right is a 1,800, but again, that's because they're just now getting EPS positive. And check out the revenue projection this quarter. They expected 250, they did 260, so they actually beat like crazy on those expectations. So hopefully that was helpful there. So Remco said PWR. So this is Quanta Services or PWR. This is a huge AI beneficiary here. So they're at an all-time high or CapEx beneficiary of all the Mag 7 spending crazy amount of money. So let's see what they're doing. So yeah, electrical infrastructure, that revenue is growing nicely. Underground utility and infrastructure solutions. So working on the underground equipment, fiber optic cable network and stuff like that. Here's their bottom line. You can't make this up. It's just so impressive. So no wonder the stock is at an all-time high because the net income and their profits are at an all-time high. Record net income quarter this quarter. So I can see why the stock is doing so well. And I think you get a decent, oh, okay. So you do get a dividend. The yield is pretty low, but the payout ratio is low too. And I like companies with low dividend yields and low payout ratios. And they are expensive because the forward PE is a 65. So I wouldn't be buying it at right now's prices, certainly. But I can see why the stock is at an all-time high. Yeah, I don't know if I'd pay the 65 forward PE, but yeah, it's just one of the classic companies that just benefit from the whole like picks and shovels play. So let's get to Hector said S&P Global. And don't worry, I'm going to be live for easily another hour. Actually, we just hit the 1 hour mark. We're going to be streaming for another hour easily. So if y'all want to hit the follow button or stay here, I appreciate y'all. Sorry if I'm missing some of your stocks. I'm reading both the YouTube and the TikTok chat, so don't worry. And Anime, yo, thanks again. Says, is Lyft worth buying? We're looking at that. And Puck said, didn't need anything, but I always learn from you. Thank you so much. Keep doing it. Hey, dude, thanks so much, Puck. You're always here, and I really appreciate all the support. Thanks again for the 20 roses there. So here's S&P Global. I love this company. This app I'm on, like this brokerage right here, uses S&P Global. Like if we look at right here, like all these numbers right here, all the data that this brokerage right here, Moomoo, gets, all comes from S&P Global. So Moomoo pays S&P Global for their data and analytics. So they're at a very fair valuation on the right, a 25 forward PE. That's so cheap in my opinion. And they have a monopoly, or actually a shared duopoly for the credit rating business. So it's basically just S&P Global, Moody's, and Fitch that credit rate stuff. And there's no real new competition coming. And I love their ratings business. Warren Buffett's a huge shareholder of this industry, of Moody's, and I think S&P Global, but he's a big shareholder of Moody's. But yeah, they're diversified into ratings, market intelligence, commodity insights, indices, and US is 60% of the revenue. And they print net income. Like, this is the crazy part. Like, the stock is tanking, but the net income is doing phenomenal. They're easily making over $1 billion plus a net income a quarter. They have 30% plus margins. The margin expansion here is great. Yeah, just 2 years ago, the net margin was a 20%. Now it's a 30% plus every quarter. So great numbers on S&P Global. I guess a slight miss on EPS this quarter. So, but 25 forward B, very fair. Yeah, 5-star Morningstar research, wide moat, and they're just getting hurt by the AI fears. So thoughts on Rubrik? Oh yeah, hey, Rubrik, yeah, this is a great cybersecurity company. Actually, I love their top line growth. I think they just acquired a company. And then someone said Qubits. Maybe we'll get to Qubits. That's a stock I would not recommend. That's like that quantum momentum kind of meme stock. Oh, someone asked about Lyft. The much better buy than Lyft, in my opinion, is Uber. I'd much rather buy Uber before I buy Lyft on a dip, and Uber is on a great dip, and I might actually go over them again. So here's Rubrik. This is a cybersecurity company, and I've always been a believer that in this software sell-off, cybersecurity stock should be a bit more immune in the long run. Like AI, if AI really does like do other stuff, like hackers will utilize AI, and the need for cybersecurity will only grow from here, in my opinion, as like AI can solve complex hacking, cybersecurity firewalls. I don't really know what I'm talking about, but I just see the demand for cybersecurity not going anywhere. I'd see it only increasing. And this is a cybersecurity play with incredible growth, partially because they just acquired a company. But check that out. The revenue's up 48% after grew 42%. Like, I look for companies that grow, and this one grows. And they just IPO'd about 2 years ago. But they're not net income positive yet. They're still losing net income. But look how they've narrowed their losses. The same time last year, they lost $130 million. They only lost $63 million this quarter. So that's great that they're narrowing their losses. And if we go down here, their cash from investing activities, yeah, look at last quarter. They spent basically $800 million buying a company. So that's what led to a little bit of their revenue growth. But anywho, I do like this one, but we really want to see them start to narrow these losses. And one of the reasons why I like this one and why they gapped up, this is why they gapped up on earnings day. Obviously, they've fallen since because of the whole software sell-off. But the reason they gapped up on earnings day is because analysts expected them to lose $123 million, and they only lost $63 million. So that was and a huge beat on revenue. They expected 320, they did 350. So great quarter, but they're just caught off in the sell-off. And companies that have a lot of debt, we saw their balance sheet. It wasn't great. Like, look at that. We definitely want to see them get net income positive kind of soon. So yeah. Have you checked Palo Alto? Oh, Palo Alto's another. Oh, I forgot to get to MNDY. So yeah, Monday.com. This is one of the software names. I don't know. I would probably rather buy Salesforce on the dip than Monday.com. Did Monday.com just get profitable? I think they did. Let me actually go check. So, or no, they like they were profitable back here. Okay, so here's their profit. So they're not losing money. So that's the good news. Like they're not net losing any money, but they're barely making any profits. But the revenue is growing. Like it was super impressive revenue growth. Like this is exactly what you want to see. Revenue hits a new record every year, every quarter, but the profits kind of aren't following that direction too much. Let's actually see what the net income projections are. So this quarter, was that a one-time adjustment? Actually, I don't know. They made 76 mil. Was that real? Let me zoom in here. I'm kind of so far zoomed out. So it says they made 76 mil in net income. They didn't actually. So that was a one-time adjustment. So they didn't actually make the 76 mil in net income. They only made 2.3 million. So, but I do like the top line. This I don't know too much about Monday.com. I wish I could tell you more. So the forward PE is extremely expensive because they're just not getting net income positive. Maybe I'd rather buy a Palo Alto Networks or a Salesforce on a dip. I don't know. But it's unfortunate to see that one tank so hard. Hi, I'm new into investing. Just bought FTSE. Do you have any advice? What is FTSE? Is that a stock? Okay, so this is an index right here. So basically, I wish I could check out the holdings of this one. I can't look at the top holdings because this is an actual index fund. It's not on an exchange, but it seems like a nice ETF. It's at an all-time high right now. I'm always a big believer in the S&P 500. I'd recommend that one the most. Buy the S&P 500. Okay, so someone said, who competes with CRSP, CRISPR Therapeutics? I feel they should do well. So I can tell you why CRISPR Therapeutics has not done well and why I sadly would not buy this stock. And it's just a pure fundamental point of view. The financials explain why this stock sadly is the same price that it was in 2018. So if you bought the stock in 2018, it's the same price that it is today. Here's why the stock hasn't done anything: because they have no revenue. This is still a startup with no revenue. If we zoom back right here to the revenue, if you're wondering why does it say 35 million this one quarter, they actually sold off some of their assets. If we go to their cash from investing activities, they literally sold off 100 million of their own assets. So that's how it was a one-time, they didn't actually make that their core business. Like you can see all the other quarters, it's 800,000. So CRISPR Therapeutics has no revenue. And that's why I think the stock is where it's at today. So here, the bad news is they have no revenue, and check out the net income losses. This is the worstest part. They lose over 100 million of net income a quarter. And if we kind of zoom out, they've kind of done that for all of eternity. That was a one-time adjustment. They didn't actually make that. For all of eternity, all they've done is just lose hundreds of millions a quarter. So it's unfortunate. So they're no revenue, losing a couple hundred mil a quarter. That's a no from me personally. But this is one of those gene editing, gene therapy companies. I don't know. It's just the fundamentals it makes it uninvestable, sadly. Just those net income losses. Hopefully that was kind of helpful there. So that's why I wouldn't be too excited about that stock. There was another gene editing company that I loved, but I'm forgetting the name, that had good financials. I always like to, whenever I say something bad about a stock, I always like whenever someone says Rich Tech Robotics, I always like to recommend a better one. I always try to recommend a better stock, but I don't remember its name. So let me do Palo Alto Networks. What's up, Cheeseburger? What's up, man? So let's check out Palo Alto Networks. This is a pure cybersecurity play, cybersecurity subscription play. Over 50% of the S&P 500 are customers of Palo Alto, and they just acquired a company. For $25 billion, they acquired CyberArk. The second largest Israeli company deal ever. Wow, that's kind of crazy. So yeah, they're acquiring CyberArk. So that'll bring even more growth to the revenue in the future. But yeah, check this out. 55% of this company's revenue comes from their subscription revenue. And this growth is so impressive. It's up 15%, after grew 20, after grew 30, after grew 32. So they're just on a streak of growth on their subscription revenue. So if we just zoom out to the revenue, this is what you want to see. just a steady straight line up at a new record every quarter. And not just the revenue, but, the profits too. So here's their net income right here, just great profits as well. So what about the free cash flow? Yeah, the free cash flow is incredible. Like over like a billion of free cash flow. Well, not on average, but like 800 million of free cash flow a quarter. It's really impressive. So yeah, this is one of the better cybersecurity plays. There's Palo Alto Networks and CrowdStrike. Those are my favorite. So, Mark said KULR, and then we'll. Oh wait, then we'll do. Do you think Pinterest is a buy, and then Salesforce? I've noticed that too. I trade better on Robinhood than Webull. They give. Oh hey, what's up, Native? Um, what's up, Plasma? Good to see you, brother. If you have a stock you want me to look at, let me know. In DKNG, maybe we'll get to that one. And then we'll get to, hey, what up? We'll get to GFS. My bad there. I've been wanting to get to GFS. That's my bad. So here's KULR. Yeah, very small name in the top right. They're only worth 128 million. So do just beware that's such a small name that the market cap, like you just don't want to trust a meaningful amount of money in such a small company. But let's see, they have revenue. So, it's a Bitcoin mining company. So 63% of the revenues, they're Bitcoin mining. And then they do energy management platform, very small amounts of revenue. So, anywho, let's see what their Bitcoin mining. Yeah, so record, I guess, Bitcoin mining revenue. So I guess they just own a bunch of GPUs that are mining Bitcoin now. And you really just value these off the NAV of the Bitcoin. So actually, yeah, look at that. No liabilities, no debt to pay, and they have 150 mil of assets. I'm guessing most of these is the value of their Bitcoin. So yeah, 150 mil of Bitcoin, or well, they had like a bit of cash, but yeah, like 120 mil of Bitcoin, and they're worth 130 million. So it's probably fairly valued at their current price. But I'm just not a big fan of the Bitcoin mining companies. They just don't really outperform Bitcoin in the long run. What was this company? GFS right here. The one can do like Carnival. Oh, is that Carnival Cruise Line? We'll check that one out too. So, um, let's see. Global Foundries. It's a $27 billion company. Very that's actually a pretty big market cap. The chart looks kind of weird, but they're at like this new 52-week high today. So congrats if you own this company. Let's see what they do. So wafer revenue. Oh, so they're kind of in the AI ecosystem, wafer chips. The US is 55% of their revenue. So if we go to revenue, so the revenue is down, the sales of the company, the lifeblood of the company, it's down 3% year over year. It's down from 2022. Let's see. That actually beat expectations, though. That did beat expectations. So I wonder why the stock is doing so well. Good balance sheet. Are they net income positive? Yeah, they're making net income every quarter. They had a little one-time adjustment that one quarter. The profits are down, but it's still good. It's still like 100 to 200 million a quarter. So, yeah, a good balance sheet. Interesting name here. I wish I could give you more thoughts on them. Some wafer company that IPO'd like a year ago. Okay. Carnival Cruise Line. And then we'll do DKNG. Hey, what's up, Michael? Why does PD keep selling off? We'll check out PD. I actually haven't heard of them. We'll check that one out too. Look at AVAV. And what up? Hey, I want to get to Uber again too. I really do like Uber stock. So Carnival Cruise Line, I don't love the cruise line in the long run. Like Carnival Cruise Line stock is literally the same price that it was back in 1998. So you bought the stock in 1998. It's the same stock price that it is today. But they have been doing well since their huge COVID crash. They've been recovering. Because cruise lines are finally back. They're actually making net income every quarter now. So if we zoom out on their net income for the past 4 quarters, I mean, they lost money that one quarter, but like if you average it out, they really are making a couple hundred million of net income a quarter. So they are making good profits to the point where if you go to the forward multiple, they traded at 13 forward PE. But these are so recession prone. Like we saw what happened during COVID. Like they lost just billions a quarter and billions a month. It was unfortunate, but they have like they still are way down bad from 2019 pandemic price. So you're not, in my opinion, if you buy this stock, you buy it to swing trade it because you're not buying this to outperform the S&P 500 in the long run. I don't think it's gonna do that, but they are interesting because they do make good money. What's their? I think they have like 105% occupation rate, or what's it at now? 102% occupation. All right, so decent net income. I actually like Disney as a cruise play. Disney's getting into the cruise line. So, DKNG, I think this company is just kind of being out innovated right now. So I can't really get to this industry, but it's like the gaming industry, if you know what I'm talking about. Um, Prediction market, we'll kind of call it for sports. And, one big competitor is like just Robinhood now. I'd rather do a Robinhood prediction market than download. So anyway, the brokerages have something that this app DKNG does not have, like a brokerage. Anyway, I don't know why the stock, because the net income, isn't it decent? Or I guess the net income is kind of the best it's ever been. And I think the revenues, look at this revenue too. So like the revenue this quarter is at an insane record revenue and like record profits too, but the stock is sold off. I don't know. Let's see. Oh, issues full year 2026 below analyst estimates. What was it? Um, significantly below consensus. So they expected 7.3 billion of EBITDA and they projected 6.5 to 6.9. So yeah, much lower EBITDA projections than projected. Anyway, yeah, like a 20-30% miss on the full year profits. So that's why the stock fell, I guess. Yeah, it's not really the worst because the revenue was good and the profits were pretty decent. What's your thoughts on buying double leverage stocks? Yeah, I recommend any leverage. Yeah, I don't take out margin. I don't really like the leveraged ETFs either. Just not a fan. Unless you actually sell it within you actually short term trade it, like sell it within a week. Okay. What should we look at next? What did I want to get to here? Ondes, Nicola, what's up? ONDS. Yeah, you've been saying that one. My bad. I wanted to get to this one. There's just so many stocks. I don't know which one to look at. Hey, Ishwar, good to see you, brother. We'll look at Pure Storage. And then we'll look at quantum. So when I heard quantum computing was the future, I bought 4 companies. They're all down. Yeah, man. The quantum craze was like a trap because all those stocks were just ridiculously overvalued, unfortunately. Like RGTI is junk, Qubits is pretty trash, and IONQ. Actually, IONQ is kind of okay, but super overvalued. So anyway, here's Ondas. I believe this is like a LiDAR or like an autonomous, Ondas Autonomous Systems company. And they're at a record revenue. You're basically buying this company as they transition from a company doing no revenue to a lot of revenue. Yeah, just check out the revenue right here. This quarter specifically, we can see is a record. It's never been higher in its whole history. 10 million in revenue. It's still not that amount, not crazy amount of money. It's 10 million, but check out what the analysts are projecting. So 10 million in revenue this quarter. They're expecting next quarter 27 million. And then the quarter after 28 million. So you annualize that, that's over 100 million of revenue a year they're going to be making. Unfortunately, they're still projected to lose 15 mil a quarter, but they just diluted the life out of the shareholder and fortified their balance sheet. So there's no real risk of bankruptcy. They literally have now, look at what happened quarter over quarter. The cash on hand went from 67 mil of cash to 450 mil of cash and no debt. So no debt to pay, and you have 450 million of cash. So they can afford to lose, 7 to 15 mil a quarter for a long time. How did they get all that cash? Well, they just diluted the life out of the shareholder. They issued 450 million of stock, which was how much of the market cap? 10% of all the shares. You know what? That was worth it because the stock was overvalued. So they diluted every shareholder by 10%, but it saved them from any chance of bankruptcy ever. Okay. We want to see if they beat on those revenue growth, as long as they beat those revenue growth expectations, that stock will probably just continue to momentum higher. Wouldn't be shocked. Which stock you talking about now? Let's go down a little. Oh, hey, my bad there. Yo, on the YouTube stream, you are able to rewind it, which is pretty cool. Yeah, if you want to support me, the best way to support me is watch the stream from YouTube, my YouTube channel. I'm trying to build out my YouTube channel for everyone watching. If you want to help me out, my YouTube channel is called Nathan Robert. It's in the link tree in my bio. You can type in YouTube Nathan Robert, and I'm streaming on there. It'll stay up forever, so you can rewind it. Or if I talk too fast, I apologize. So why does PD keep selling off? Let's see. So this is PagerDuty. Well, it might just be because all the software is selling off. But yeah, dang, that's unfortunate. So they gapped down on earnings day, and then they've just sold off ever since. Dang, that's unfortunate. Let's see what they reported. So wait, that's an all-time low. So this stock is at an all-time low, just like Webull. Webull, the one I've been buying, is at an all-time low right now. So let's see what this company actually does, because I actually haven't heard of them. A software company. They're in the ARK portfolio, so that's interesting. ARKK owns them. Next level incident management powered by AI. What problem do you need to solve? Automate more work, AI, ops, automation. So, hmm, kind of interesting here. Trusted by Zoom. So it's actually a pretty interesting software company. So let's go check out their financials. I am curious. I'm intrigued. Pager duty. So let's see revenue right here. So the revenue growth is slowing down. So revenue year over year, the revenue is only up 4.7%. So the revenue growth is like a mid single digits now. So we kind of want to see the growth come back. But let's go check out the profits. So the revenues, it did hit a record. Actually, despite that, the revenue did hit a record. It's never been 124 million before. So record revenue. Let's see if they're at record profits. So yeah, look at that. For all of time, this company just lost a lot of money, 10, 30 mil a quarter. But for the past 2 quarters, they're finally profitable. And probably for the rest of time, they're going to be making net income every quarter. So they didn't actually make 160 million this quarter. They only made 8 million. So they had a little one-time adjustment, but uh that's still good. Okay, so they did miss on revenue. So yeah, analysts were not expecting the sales to only grow 4.7. They expected more. So they did miss on revenue expectations this quarter. So I can see why they gapped down on earnings day, but it was still great net income there. So they are expensive on a forward metric because they're just now getting net income positive. Yeah, dang, they only were 630 million, but 39 forward PE. Oh, hey, we'll get to interactive brokerage and Pinterest. Oh, yeah, we got to get to pure storage too. Uh-oh. Okay, there we go. Actually, let me do pure storage now for the homie. PSTG. So pure storage. This one, what's the forward metric? So expensive forward PE. This is like a subscription play, I believe. So you basically rent out storage like cloud from them, or you could buy the part yourself. Or here's their subscription services revenue. This is the best part about them because this consistently grows. Check out the revenue. It's up 14%. After grew 22, after grew 26, after grew 32. So incredible subscription growth. But when we go over to the other side, their product revenue, actually, this also looks good. It's up 17% to a record this quarter. So actually, both businesses are booming. So when we scroll out to revenue right here, yeah, revenue looks good. But what about the profits? It's a little choppy, like that 1 quarter every year they lose money. But overall, I mean, they are making profits every quarter, but it's like down from the past 2 years. So see these year-over-year declines, the bottom, they're not really growing the actual profit. So that means their margins are going down. So that's one thing to watch. Like, why are their margins falling? I don't know. Free cash flow looks good. So they are expensive. That's the thing. I don't know about this one. Morningstar has a narrow moat on them. I mean, it's not the end of the world. I wish I could give you more thoughts on them. I apologize. Oh, let's do SanDisk. Shout out the member Brian Paul, the legend. I appreciate you. Let's do SanDisk really quick. SNDK. Why don't you show what you were talking about on the letters? Yeah, hey, on the YouTube stream, you should be able to see the letters at the top left, but my bad. I need to do that. I usually try and say the company name. So this is SanDisk right here, SNDK. This is another memory shorted stock. You know, I was on Amazon looking for an external hard drive, and I saw a SanDisk external hard drive, and it was a lot, like over $120. And I remember it being $40 when I bought one last. So anyway, here's SanDisk right here, a huge beneficiary of this memory shortage. And here's the thing, even though this stock is pretty much at an all-time high, they're not expensive. And I think they're going to go up probably another 30% before it maxes out. Like if I was a shareholder, I would not be selling SanDisk. And here's why. It's because of the projections. Like this quarter, they expected 482 bill and they did 803 mil of net income. And next quarter, it's supposed to be 2 billion. Like just next quarter, it's 2 billion and then 2.8 billion. So if you kind of annualize that, that's over 10 billion of annual net income. And the whole company is worth 92 billion, which puts the forward PE at a 10. So if we look at their forward, or a 9, yeah, they say the forward PE is an 8.7. Which means you're trading at 8.7 times next year's net income. Or it's even better, it's EPS, so net income plus dilution. So they're going to be doing $17 of EPS. Now, if the memory shortage, somehow fixes itself out of nowhere, then great, or well, not great, but they're seeing this issue persist into like 2028 and stuff, completely sold out in 2026. Like, So yeah, this is your memory shortage play. That's if you're wondering why that one has ran up so much. It's just like Micron. I remember the stock at $400. Oh yeah. Um, all right, let's look at digital brands. Hey, give me a ticker symbol. Give me the ticker symbol of digital brands, and we'll find it for you. You move through your screen so fast. Yeah, my bad. Yo, I have that TikTok mindset, where I just if well, actually the TikTok stream is cooked because they already removed my For You page, so it doesn't matter eligibility. For You page eligibility, but that doesn't matter. Um, I just try and move really fast because I just always have done that on TikTok lives, and I'm just used to it. So I apologize if I go too fast. So here's Interactive Brokerage. Actually, this is another brokerage just like Robinhood. Robinhood stock is down like 40% off all-time highs, but this one didn't see that same dip. Interactive Brokerage is pretty close to an all-time high right now, so it's like a competitor to Robinhood. The brokerages are a great industry, the picks and shovels fintech place, because they just collect a huge margin every time you do a prediction market contract or a crypto fee or an option contract. They just collect a great margin. So here's their brokerage accounts. They have 4.4 million paying clients, up from 3.34. So that's a huge increase. So yeah, here's their interest income. That's up 11% year over year. Then yeah, commissions, brokerage commissions, that's up 23% year over year. So not too shabby. And check out their bottom line down here. It's incredible. Easily now over $1 billion of real net income a quarter. And if we zoom out, that's the highest it's ever been. That's why I'm so bullish on the brokerages. That's why I own Robinhood, SoFi, Futu, Webull. I own all the stocks because they're all great. And Interactive Brokerage is another great one. I just can't own them all, but this is another great one that I'd happily own. A 0.5% dividend yield, low payout ratio. They raised the dividend super fast, way faster than inflation. A 30 forward PE. I think Robinhood is at the same forward PE now, so that's kind of interesting. Robinhood, Interactive Brokerage, same forward PE. Their daily active trades are 4.04 million daily trades for all their brokerages. So anyway, pretty cool there. IBKR. Oh yeah, I meant to get to Salesforce. So CRM Salesforce right here. We haven't looked at them all stream. So yeah, that's one of the big software names. Oh yeah, Pinterest. Yo, I just forget sometimes about these stocks as the chat scrolls down. My bad. Don't feel like you're spamming if you say your stock over and over. I don't mind it. So I apologize. Yeah, definitely. I feel bad when I forget. So yeah, we'll do Pinterest after this too. And oh yeah, PGY stock. That one tanked on earnings, I think, when the earnings look good. So here's Salesforce right here, one of the main falls of the, you know, AI thesis. So let's see. One of their best acquisitions of my favorite assets they own is Slack. They bought them for, I think, $50 billion. It was one of the biggest acquisitions ever in like 2021, 2022. I remember it. They bought Slack. Almost like every company uses Slack, or like so many companies do. But anyway, like Amazon uses Slack for their employees and stuff. But yeah, the Slack revenue is up 19%, after grew 9, after grew 10, after grew 52. So they're just seeing incredible growth there. But they're very diversified. Agent force sales, or actually, they shouldn't call it agent force, service revenue. The sales revenues at a record. That's the Slack revenue up 19%. Integrations up 6%. Marketing's up 2%. So if we combine all the businesses, the total revenue is up 8%. So we're kind of an environment where this company's revenue is going to grow at like high single digits for the rest of time. Nothing more than that, like high single digits, but they are acquiring some companies. Like they just bought INFA, and they're the most profitable they've ever been. The highest net margin they've ever had. If you look on the right, they have a 20% net margin this quarter. It's never been higher before. Record net margin, a 20% net margin, as they're cutting back on their stock-based comp and the net. So that means the net income's at a record, over $2 billion net income. So it's like we're in a scenario where they're like, look at this net income beat, not even like adjusted, like they really did beat like crazy. They expected 1.6, they did $2 billion net income. So they beat great on EPS. They're diversified internationally as well. So I do like Salesforce, but it's just the AI thesis that I'd keep this one as a small position. Like they're cheap, they're actually super cheap at a 25 forward PE. I mean, that's the cheapest I've ever seen Salesforce. And you get a dividend, and they do share buybacks. So I'd keep the allocation of that one low, but I wouldn't sell out of that company if I was a shareholder. And I'd be careful adding more. So let's do Pinterest, and then we'll get to Akinter share, bro. Hey, what up, Mayan? Can you give me the ticker symbol for Akinter? We'll check out that stock, or Akinter. Tensure. I don't know how to say that. We'll check it out though. Oh, DGBI, my bad. Hey, Infinite. We'll definitely do DBGI too. Um, so here's Pinterest right here. They are, that social media website. If you heard of them before, I, I've never really been on the website. I just like moms finding recipes or festive stuff. I don't know. But they're cheap on a forward metric at a 23 forward PE actually. So that's interesting. Trading at 23 times forward net income. Here's their active users. So they have 619 million monthly active users, and that's up from 553. So yeah, they're growing their monthly active users. Let's see what the revenue is. So revenue grew 14%. So they missed on revenue, missed on net income, missed on EPS. So they did triple miss, but it was the slightest miss. It was such a small miss. Like, here's their profits right here. Actually, the profits were really good. It was a nice increase from the same time last year. Q4 is the really good year, and it was a nice increase from Q4 of last year. So they are like getting more profitable. And another great thing about Pinterest is the fact that they have no debt. They're a debt-free company with 2.5 billion of cash. What's the market cap of Pinterest? So they have 2.5 billion of cash. The whole company is worth $10.2 billion. So literally 25% of what you're paying, 25% of the entire market cap is just their cash on hand, their cash pile. I'm guessing they just bought back stock because, so their cash and financing activities was negative 600 million. Let me see if it was stock buyback. So this quarter they bought back 600 million of stock. I guess that was poorly timed because they could have bought 16% more of stock if they waited, but 25 forward PE. It's actually not that bad. They're actually cheap. I actually like Reddit too. Reddit is at a 27. Actually, Reddit might be a better buy because it's more growthy. Reddit is at a 27 forward PE on my own math. So I'm actually super close to buying more Reddit. Already own some. But I really do like Reddit. Okay, DBGI, what was this stock again? Digital Brands. Okay, we're not really going to cover this stock. So, and SCHD, what up, Kale? We'll check out SCHD too. It's an ETF. If you look in the top right, the whole market cap, they're only worth $39 million. So that's just such a small market cap where it's just not really worth covering. I can't really take it serious, but let's see if we can figure out why they're worth so little. So yeah, the lowest amount of revenue ever. I mean, the revenue's down 32% after it fell 25%, and the whole revenue is only 1.6 million. So 1.6 million of revenue, and they're losing 3 to 5 million a quarter. And that's really bad when you lose, $5 or $4 million. Your whole company's worth 40 million and you lose $4 million. That's 10% of the entire market cap you lose just in one quarter. So, that this quarter, 10% of the market cap, 6%, over 10%. So just the past year, they've lost 40% of the market cap. So there's real bankruptcy risk here with declining revenue. The fundamentals start to kind of explain why the stock is at all-time low and worth so little. So that one could be a fun little momentum swing trade, but not a great buy and hold forever stock, I don't think. So SCHD, this is a dividend ETF right here, and a lot of these boring dividend stocks have actually done great recently, like a boring Verizon, a boring Chevron, Altria, Pepsi, Coca-Cola's at all-time highs. So it owns a lot of the higher yielding names. So this is a nice dividend ETF. It has a 3.3% dividend yield and owns a lot of higher yielding names. And an ETF is just like a basket of stocks that diversifies your money up into a bunch of different names. So buys a bunch of higher yielding stocks. So hey, what up, Slanell1? Thanks for the insight. Even if you stay live 24 hours, you wouldn't run out of tickers to go over. Yeah, hey, I appreciate you, XCR. So Will said, MCW. What was MCW? Did we get to that one yet? We did not. Okay, MCW stuck. And I'm still missing out on some names here. I want to get to SWBI. We're going to be live for another 40 minutes. So, but look at SoFi. Isaiah, what's up? Sprouts Farmers Market and SoFi. I love these names. We'll check them out too. So what is this company? So this is MCW. They're called Mr. Car Wash. I've not heard of this stock before. They're only worth $2 billion. Maybe they own a bunch of car washes. Let's see. And car cleaning services. So they really do own a bunch of Join Unlimited Wash Clubs. So they own a bunch of car washes. Let's go check out the numbers here. Are they profitable? They are. So they're actually at a cheap valuation because it's kind of a commodity, a 14 forward PE. Let's see what their revenue is. Let's see what do y'all think the net margins are for car wash businesses? So the revenue kind of grows single digits, 5%, 4%. So revenue's it's still growing though. So that's great. So revenue's up 5, and they make actually pretty consistent net income every quarter. Always over, like, if we average it out, like 15 to 20 plus million, like 20 million of net income a quarter. So that means but they have a 10% net margin, except for Q4. So yeah, 10% net margin on these car washes. Maybe it's because they're a subscription model. They collect this kind of subscription recurring revenue from the car wash people. I guess some people might forget to cancel the subscription stuff. It's like a niche name. It kind of reminds me like a Planet Fitness, PLNT, Planet Fitness. They own a bunch of gyms. So, and they just collect, royalty revenue from the franchises. So every franchise has to pay a certain percent of all their sales every month back to the corporation. So they actually have surprisingly good profits for Planet Fitness, a gym, near 20% net margins, and they're making 40, 60 million net income a quarter. Check that out right there. And Planet Fitness specifically caters to people who I'm now forgetting their whole marketing strategy. Oh, I forget it now. But Planet Fitness has some genius strategy, and I'm just completely forgetting it now. Where they collect that nice subscription revenue. Okay. Someone says, where I live, there's nothing but Mr. Car Washes. Really, Micah? Hey, that's pretty cool. Maybe you could buy the stock then or something. So what did I want to go over next? I am missing out on some of these names. SWBI. So I can't really talk about what this company does, but I think they sell squirt, I think you know what I'm talking about. Weapons. So the stock is the same price that it was in 2006. You're not going to outperform the market with this stock right here. The profits have always been really choppy here. So again, this company sells weapons, and this stock was up. We'll call it personal defense items to not get in trouble. They printed money back in 2021, but ever since then, they've the profits have been down, and they have no profits anymore. So sadly, I really just, nothing's blowing me away. It kind of doesn't really seem like, the sales, the revenue, the lifeblood of the company, revenue's down 4%. Maybe under certain administrations, this does better. I really don't know how to play this stock as maybe a swing trade, but I'm kind of just avoid this industry as as an investment. There was another stock like that in that same ticker symbol that I forgot. How do you turn on dark mode on Moomoo? Hey, I would go into my settings and try and figure it out. I think it's in general. Oh yeah, there you go. Hey, we could go on light mode. Is that too bright though? I feel like some people, whenever it's the whole screen is white, I get blinded on my phone. Okay, so let's look at Sprouts Farmers Market. This is one I do own. It's one of my worser investments. We're down bad on Sprouts Farmers Market. We're down 45% on them, or $600. So they're kind of just being out innovated. If you're wondering what is Sprouts Farmers Market, it's just like a grocery store, boring grocery store. But what I like about them is they're a niche one. They are a healthy grocery store. They actually just opened their first ever Sprouts Farmers Market in New York, which is kind of cool. But they're kind of just being out innovated by Amazon Whole Foods, because they don't really have that online presence. Anything you can get at Sprouts Farmers Market, you could most likely get on Whole Foods, which is Amazon owned, and Amazon will deliver it to you to your door. When I don't think Sprouts Farmers Market, they don't do that. But this makes an incredible opportunity because they are very cheap at a 12 forward PE. Just know the moat, their strategic moat, isn't too amazing, because everyone can be a grocery store. But what I like about them more than I'd rather own them than a Kroger, or a way more than a Target, is I like their healthy niche to them. And that's what's leading to their margin expansion. They have way better margins than Costco, way better margins than Kroger, triple the net margin. And grocery stores are a net margin play. So they're at a 12 forward PE. Check out their net margins. It's actually really good. Actually, specifically the year-over-year growth rate, up 15% year-over-year. After it grew 23, these are all positive year-over-year growth rates to the net margin. So I love that the margins are growing, the net income's growing. Like here's their net income right here, record net income, record EPS. Like actually Sprouts Farmers Market is a big buyback play. They actually have they don't do a dividend. They have no dividends. The way they return money to the shareholders is via buybacks. Let me actually show you that because it's my favorite part about them. And so look at the stock retirement of stock. Look at this for all the time. They buy back heaps of their stock every quarter. So anyway, that's my favorite part about them. Kind of a healthy grocery store. I had like this new 52-week low level, and it's weird. I don't really know exactly why. It's not like they're missing on their fundamental metrics. They're just caught in the wave of the sell-off. So that's why I'm not selling out of them. I'm a shareholder here. I'm down super bad, down 45%. But am I selling? I kind of did. I've been buying a little bit more, but no, I'm certainly not selling. My thesis, my trust has not changed. The only thing that changes is the stock price. Like I still love their margins. And I acknowledge that it's kind of a commodity like Amazon's kind of out innovating them. So knowing that, I keep it as a small position, but I still have it as a position, but as a small position. So ODD stock. Let's try this one out. ODD. Hey, what up, Jimbo? We got to get to IDEXX too, or AMAT. We'll try and get to one of these for sure. And my bad if I'm missing some more here. They let you sign up online, but you have to come in and sign a paper to cancel. Oh, hey, those, I'm sure they do that. And we'll look at Dell too. What's up, Ishwar? So prefer dark. Okay, thanks. We'll get to KRP. Oh, let me get to KRP too. My bad. So here's Oddity Tech. They're at like this all-time low level, 52-week low, unfortunately. Probably just caught in the software sell-off because they reported earnings and they gapped up, but then it kind of sold off really quickly. They're at a 15 forward PE. So they're at a cheap, 15 times net income. Let's zoom out to the revenue here. So the revenue looks good. These are all green year-over-year growth rates. And let's see about net income too. Yeah, and net income too. So they are really, they're really at like a 16 forward PE. They pay a dividend, no dividend. That's all right. So what does this company actually do though? Household and personal products, lipstick, makeup brushes, mascara. Oh, so it's like a cosmetics company. These kind of products really have really high margins, kind of like an Elf Beauty. Whoa, what is this website right here? They got a whole, I'm really scrolling here. Come on, I just want to find what you sell. Well, they're really making me scroll. Menu. You know what? They're an Israel company, so they are headquartered in Israel. Know that. So they're headquartered in Israel, some sort of cosmetics company. Oh, they're actually on my watch list too. So actually, thanks for that. I'm always looking for. I haven't invested in the industry yet. I saw Reddit, your take, where people understand to see the stock, take your time. I really like Reddit. Yeah, I think Reddit's a really nice stock. IDEXX. What was IDEX Laboratories? So we'll look at IDEX and then we'll get to the royalty company that someone wanted. Kimbell Royalty, KRP. Then we'll do that one. And then we'll get to DoorDash. Hey, we'll try and get to DoorDash too. Sorry about that, White Tea. What's up, man? Good to see you. So here's IDEX Laboratories. Sorry, I'm trying to get to all the stocks here. IDEX Laboratories, let's see. They do companion animal group. So that revenue is growing double digits. It's actually just hit $1 billion for the first time ever. We scroll down, it's never been at $1 billion, but $1.01 billion this quarter. They're nice geographically diversified. 65% of the revenue comes from the US. These expectations, they've been beating them for the past 3 quarters in a row, and they're up and to the right. It's supposed to be $1.2 billion. Yeah, they beat on net income for the past 3 quarters in a row, so they're just beating on every metric. So no wonder the stock is doing so well. Yeah, so look at that EPS growth. That's incredible. So I wonder what the valuation is. We'll go check that out. So yeah, $3 to $4 of EPS a quarter. So the forward PE, okay, so they're still expensive at a 43 forward PE, but I can see why they're at why the stock has done so well, because the fundamentals have done so well. They're really making $300 million of net income a quarter. So yeah, that's great net income. So like some companion animal company, seems nichey. You still think semiconductors will continue to rise? I do for a couple years probably. What was the one? Oh yeah, okay. KRP. Oh yeah. Speaking of DoorDash, so Uber is the much better buy than DoorDash right now, in my opinion. Like if I had to buy one right now, I'd definitely buy Uber. I'd feel way more comfortable buying Uber over DoorDash, and I feel like I get better returns. But I'll still look at DoorDash because they're like niche. They're focusing on the food delivery. So here's Kimbell Royalty. I think this is like an oil and gas royalty stream company. Let me verify. Owner of mineral and royalty interest streams. So they must have good margins. Let's see. 52% gross margins, 30% net margins. So they're making, I guess they had a little one-time adjustment that one quarter, but they're usually making 25 million in net income a quarter. They pay a crazy dividend and 11% dividend yield. So looks like a stock you basically buy to maximize your dividend income. It paid 35 cents out in dividends. It doesn't, the EPS slash the net income does not cover the cost of the dividend. So I would be a little worried about fully trusting that dividend in the long run. It doesn't look too safe. Actually, that's why the stock is lower than it was in 2017. I'd be a little careful. That one looks like you buy to maximize your dividend income. So let's go over DoorDash right here. Ticker symbol dash, and then we'll do some of these other ones. And what up, Marcus? Do you know why the Nasdaq 100 was red on Friday after the CPI report? I actually don't know. Maybe I think it's just momentum. Um, but it wasn't because of CPI the sell off. I'll say that. So here's DoorDash right here. Dang, yeah, I like this new 52-week low level. Let's go see if there's any news around this company. Not really. So, oh wait, when did they wait? February 18th. Oh, so they report earnings in 3 days. So yo, wait 3 more days to get DoorDash earnings. Actually, okay, so they report earnings in 3 days. So that'll be something to look forward to. So if you buy the stock now, it's kind of tough because you're kind of betting into earnings. But I love their metrics. Like they're everything's at a record. Check out the revenue. That's what you want to see. The revenue was 3.5 billion just this quarter, and the profits are a record too. So, it used to be a tough buy a year ago. They were losing a couple hundred mil a quarter, but now they're making a couple hundred mil a quarter. And the profits were at a record this quarter, specifically 260 million. So that was really impressive. And they just bought like this delivery business called like Deliveroo. It's the way to kind of diversify internationally. It's like an Australian DoorDash, basically. They're called Deliveroo. In Australia, they acquired them for $1 billion. So I like that they're doing acquisitions that'll bring even more growth to the revenue. So yeah, look at the revenue expectations. It's going to go from 3 billion to 4.16 billion. And we can see the net income is supposed to stay at like 250 to 300 mil a quarter. So they're going to be making easily in GAAP net income after tax over $1 billion of net income a year from now on. And the whole company's worth 69 billion. So yeah, that's why they are expensive at a 55 forward PE. Uber's at like a 21 forward PE, but I'm really satisfied with DoorDash's metrics. They are good. Yeah, I do really like them. Okay. We'll get to Dell. Oh yeah, Dell too. Oh my goodness. We definitely got to get to Dell as well. Comcast I saw too. And Applied Materials. These are good ones. Comcast, the main bad part here is their cable business. Residential cable business. That's just kind of going to decline for the rest of the time, single digits. So yeah, residential connectivity, this is just going to decline sadly by single digits for the rest of the time. And what they need to do is invest in all their other businesses. And they've been building out their theme parks like Nintendo Land, Nintendo World, I think they just finished. And some of these, I forget what they're called exactly, but they're building up their other businesses. Like they own like a bunch of like media, their studios business. Like you've probably heard of a lot of their movies, like the Despicable Me franchise, all the Despicable Me movies. They own all those and a bunch of other movies too. So they have the cable business, the media business, the theme park business. So if we go to their net income, they still print money. Like if you go to the revenue's flat. Not really going to increase anytime, but they still print actual profits. But do note the actual profits. This has to have been a one-time adjustment, I'm assuming. It's just the profits fell 30% year over year. Last quarter they fell 5%. I was expecting like a single-digit decline, but I wasn't expecting 30%. But it's still a lot of money. They're still making 4 to 5 bill a quarter. But it's just like that thesis where the long-term thesis where the growth is kind of gone. The big growth story of this company is kind of over. So this kind of stock looks almost just like Disney. or they're the same prices they were like a decade ago, back in 2016. Yeah. Yeah, Disney's still the same price that it was in 2016, and Comcast is too. The stocks almost look kind of identical because they both kind of have similar business models with their theme parks and the studios. So, yeah, that's why they're cheap. That's why they traded a 10 forward PE, because the growth is kind of gone. But yeah, no, the separate is I don't think you're going to outperform the S&P 500 by buying that stock. But I think they have a nice dividend, a really nice safe dividend too. What stocks do you think have the best valuation? Actually, I made a watch list at the beginning of the stream. I went in depth. It's not this watch list. It's right here. Oops. Oh my goodness. There we go. All the stocks on screen right now. Booking Holdings at the top, all the way down to Uber. So Uber, Meta, Microsoft, Robinhood, Amazon, and Visa. All these I think are great stocks to buy. So let me go over Dell. This is like a value play, a value stock. You get a nice yield. It's a low valuation. So they do insane. They bought back like 7% of all the shares just this year, and they pay a dividend. So yeah, you get a 1.7% dividend, safe payout ratio, like a 30% payout ratio. And look on the right. So the payout ratio is going to go down because it's a forward PE way lower, a 12 forward PE. So they're getting into what Supermicro is doing. So their infrastructure solutions, kind of installing these data server racks for you. That's up 25% year over year after it grew 33%. So that's a nice growth rate, 24% year over year. And if we go to their net income, it's great. They easily make over $1 billion of net income every single quarter, like a little bit more than that usually. Yeah. So easily over $1 billion in net income a quarter. So what are they doing with the bill in net income a quarter plus? Well, they pay a dividend, which only costs 350 mil. And the main winner, of course, is the buybacks. They're spending $1 billion of a quarter on share buybacks. So that's why the net income is up by 32, but the net income per share is up by 39. So the share buybacks give you more ownership in the company, makes the EPS grow faster than the net income. It just helps out the shareholder. Okay, TTAT. What up, Charlie? Wait. TATT. Okay. TAT Technologies. Oh, this one's on my watch list. Whoa, they're at an insane all-time high right now. They've done incredible. I don't remember them, but they're on my watch list. Let's see if I can figure out what happened here. So even at this all-time high, they're still pretty tiny in the top right. They're only worth $637 million. But let's see, they do maintenance, repair, and overhaul for aviation components, okay? Maintenance, repair of services for heat transfer components, and then original equipment manufacturing. Okay, so let's check out. They're profitable. So that's the crazy part. Record profitability. So it's not that much profits, but it's still profits nonetheless. They really did make, after paying $1 million of taxes, they made $4.8 million. If we annualize that, that's 20 million net income a year. That's pretty significant. Like if your whole company is worth only 637 million, making $5 million is great. So I can, that's the thing, out of all the micro caps worth $600 million, I want to buy the one that's making 5 million net income a quarter and growing at this double-digit rate. So I can see why this stock has had such a nice little boom, and most likely it's probably not going to stop. Those were some impressive net income numbers. So yeah, 28 forward PE. I'm going to re-add them to the top of my watches. I wouldn't be shocked to see them continue to climb higher. 28 forward PE. That's actually pretty impressive. Can you look at Grab? Oh yeah, I remember this one. We just looked at DoorDash and Uber. This is the international Uber. So if you're wondering what does Grab do, they do exactly what Uber does, but internationally. They do the same ride-sharing business, but check out where it comes from. Malaysia, Indonesia, Singapore, Philippines, Thailand. Notice the US and Canada isn't on here. So actually, that was genius about Uber buying this stock. It's kind of cool. This stock is actually backed by Uber. Uber owns 13% of all the shares, and Toyota Motor owns 5.5% of all the shares. So Uber buying this huge stake in the company gives Uber an instant international diversification into all these other countries, because we know this commodity of ride sharing is universally needed no matter where you are, and even in other countries. And this is a nice way to get international exposure. So that's what's pretty cool about Grab. And they're really profitable. The most profitable they've ever been. Look at this. This is their profits this quarter. It used to be a hard buy. You couldn't buy them back there with no profits. But now this is their real profits. It's the most it's ever been. I'm super satisfied with this quarter's earnings. Someone said, what app or site are you using? Yeah, hey, Malachi, if you want to get this app I'm on, it's actually a brokerage. It's in the link tree in my bio, the very first link there. It's a brokerage called Moomoo, my favorite app to buy stocks on and analyze stocks. It's free, costs nothing, and it's no fees. So yeah, anyway, record profits. That's why I would not, if I was a shareholder grab, I certainly would not be selling. The fundamentals look great. I like that they're backed by Uber, and I like the actual business model. So yeah, grab's pretty cool. What's this next one here? Um, ASTH stock. What is this one? What's up, hiatus? Good to see you. So, unfortunately, this one's not done too well. It's at almost like an all-time low. Same price that it was in 2017. Dang. They're only worth $940 million. So, that's a small market cap, 940 million. So, Care Partners. This growth is actually very impressive. The Care Partners revenue is up 96%. After grew 42, after grew 30. So that business revenue growth is super impressive. So yeah, this revenue's at a record, but the net income, like the sales are at a record, but the net income has only been going down. So it's like as the sales grow, they lose more and more net income. That's weird. Very strange. So they just bought a company, it looks like, for $500 million. What does this company actually do? Medical care facilities. Risk bearing healthcare management company, healthcare delivery platform, a media care, radiology. So, I reject, yeah, no cookies for y'all. So, huh. I guess here, so some sort of healthcare, maybe hospital, software, medical care sector company, but those net income numbers are probably why the stock hasn't done so well. The revenue growth looks great, but it's just the net income. That is weird. Yeah, no problem, Malachi. Snowflake stock, yeah, this is a great one. It's kind of like a competitor to Palantir. Palantir is really focused, and Snowflake too, on the government and like rich enterprise customers. So, like when UiPath is going for the small, medium-sized businesses, these are like the real AI beneficiaries. So, for like real AI uses, like for companies to use their data with Snowflake. So the most impressive part about this company is just the growth. It's up to the revenue growth. The sales are up 30% after they grew 30, after they grew 30. Every revenue or every quarter, the revenue hits a new record. It's so impressive. A new record every quarter, every year. So that's the impressive part. But the bad part is about Snowflake. The thing that scares me away is these net income losses. And it's kind of a lot, as you can see, and it's kind of gotten worse too. Like over time, the net income has just gotten worse and worse. So this company is losing, 300 million of net income a quarter. And it's tough because they're nowhere near profitability. Those are 300 mil a quarter, but the revenue growth is really good. So what we want to see, in my opinion, is for Snowflake to significantly narrow these net income losses, because I think I'd maybe rather buy a Palantir than a Snowflake, because Palantir is actually starting to look decently attractive and their growth is just phenomenal. It's so good. So yeah, US is 76% of the revenue. Actually, I still really like Snowflake, but it's just those net income losses that are the only reason why is like a huge anchor on the stock. It's not good when they lose that much net income. I don't love companies that lose just that much net income and they're that far away from profitability. So Eric, what's up, man? He says VEEV stock. Oh, they're on my watches. Viva Systems. And Ishwar says Red RDW stock is good in space. Please share your thoughts. Yeah, we'll do Redwire stock too. I do have to go in 15 minutes, but we'll try and grind through these last stocks here, and I'll do a portfolio update. By the way, we stream every Sunday at this exact same time. If you want to hit the follow button or subscribe, we stream every Sunday at this exact same time. I try to stream every single day as well. And by the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. I don't coach. I sell absolutely nothing. So please watch out for people impersonating me. I'm just under giving my opinion. None of this is financial advice. So I'd appreciate it. Hit the like button. So here's Viva Systems. I think this is another drone player, some aerospace industry. I don't remember. But the whole company is worth $28 billion. What do they do? So, it's a subscription company. I'm probably completely wrong about them being in the aerospace industry. So they're a subscription company. I love subscription model companies. It's all reoccurring revenue. And this is growing very nicely. It's up 17%, after grew 17, after grew 12, after grew 17, after grew 30. So they're on a nice streak of growth. Like it literally just hits a new record every year, every quarter. And North America, 60% of the revenue. So let's see the projections. Yeah, they're great as well. They're beating on expectations every quarter. They beat on revenue for the past 3 quarters in a row. And the expectations are up and to the right. But I'm guessing this is just this is some subscription software company, and the reason they've sold off on no earnings, the past couple weeks here is probably just because all the software names are selling off, like Adobe and Salesforce. So, whoa, they have incredible margins. Check this out. Like they have, for a software company, they're already at 30% net margins in printing net income. This is so consistent. Check that out. That's actually shocking. What's their forward PE then? Yeah, a 28 forward PE. So they're trading at 28 times next year's net income. This is incredible. And this is real after-tax net income. It looks great. Yeah, check out VEEV. Net income's up 27 after grew 37, and a no debt too. Huge cherry on top. I mean, it just keeps getting better. No debt and 6.6 billion of cash. That's got to earn them interest too. Let's see. Interest, I think that's just 60 mil of interest a quarter. Wow. So anyway, I have nothing bad to say about this company. Everything looks great here. Oh, they really are making like 50 million of interest a quarter, because it looks like they're paying no taxes, but that's because they have no debt and they're making positive interest. Wow. Actually, I'm going to also re-add them to the top of my watches. I got to do more research on this company. Let me pull up their website really quickly just to get a better life sciences, building the industry cloud for life sciences. Oh, so they're working with Merck, Moderna. I haven't heard of some of the. Oh, United Therapeutics. I love that stock as well. I got to look at United Therapeutics later. I love that stock. Okay. Let's look at some more here. Lam Research, LRCX. Let's check that one out. Can you do a super micro? Yeah, we'll do super micro and TOYO before I go here. Lam Research is on my watch list. It's a wide mode. You know what? Let's go check out what Morningstar has to say. Yeah, this is another semiconductor play. And ASML is at an all-time high. Lam Research is at an all-time high. So congrats if you own Lam Research. You got to be up on your money. Let's see if there's any kind of when did they report earnings next? They just reported earnings a couple of days ago. Okay, cool. So let's see what they reported. So they beat on revenue and they beat on net income massively. Analysts expected 1.6 or 1.462. They did 1.59, a really big beat on revenue and net income and EPS. So they beat on every metric, triple beat quarter. So check this out. The margins are up. So the sales are up by 22, but the net income is up by 33. Which means they expanded their net margin. So margins are up as well for every quarter for the past year. This is insane. So they're not just at all-time highs because of momentum. They're at all-time highs because, all the financial metrics are at all-time highs, and the financial metrics that they're reporting are beating like crazy versus what the analyst expected. Like that's a great beat on net income and revenue. So yeah, I can see why they're at all-time highs, and you get a 1% or 0.5% dividend yield. I wouldn't buy the stock here at all-time highs at a 38 forward PE, but I can see why they're at all-time highs, and I wouldn't really trim or sell them if I was a shareholder. Let's try TOYO real quick. So Toyo Co. Very small company, $290 million market cap. So 97% of the revenue comes from Asia, so most of the revenue comes from international. The revenue actually for the first half of this year, so they report in halves. So 2025 first half, they did 140 million of revenue, so they have a bit of revenue. Sale of solar cell modules. So it's a solar company, solar cell modules. Okay, so this is a solar company. So I guess if you're looking for a solar play, maybe this could be one to look into. I don't know much about them. I know the cost of solar panels being really commoditized right now. But yeah, they're worth $290 million, trading at it says they're trading at 4 times next year's net income. But I don't know if I trust the analyst there. But they are making money. So Super Microcomputer, this one has a margin problem. So they're competing with a Dell a bunch right now, and I was looking into it. They're giving customers these bulk deals, and it's really lowering their margins, and they're missing on their expectations. Let's see if there's any weekly news here. Nope. Yeah, check this out right here. If we go to revenue, the revenue was up. Actually, this is incredible. They just got their huge installation thing, but look at the revenue. The revenue's up 123. And this kind of skews it because it looks so big, but the revenue's up 123. The net income only grew by 24. So that means, like, it doesn't seem this extreme, but it's this extreme. The revenue grew 123. The net income only growing 24 means their net margin fell by 44%. That's why on such a great quarter, the net income and revenue growing up so much, the stock still falls after because it's really a margin issue. So if we go to gross margins, the gross margin is down 47% and the net margin is down by 44. So it really was, look at this margin over time. The net margin, and it's not some one-time adjustment, like the real gross margin, it really is down a bunch. So that's the issue here. Despite a record quarter, like if you zoom out, like great net income quarter, but not good on the margin. So that's hopefully gives some more perspective there. That's one thing to watch, but it's still not the end of the world. Like still, Supermicro prints money, easily 200 to 400 million. Looks like they did just leverage up a little bit. I do wonder how their debt's looking. $4 billion of cash. What's their long-term debt? I don't know if this, so they almost have, so they do have a net debt position. I remember for the longest time they did have a big net cash position, but anyway, that's why they're at this 34. But you just watch the margin there, still good numbers. Yeah, I know with like OpenAI, like Supermicro should be a huge beneficiary of this huge CapEx spend of Amazon, Google, should be a huge CapEx spend, but they're the commodity. They're the one that just install it for you. So Dell, Supermicro, those could be nice plays. Yeah, 12 PE seems cheap on Supermicro though. Elf Beauty, yeah, so Elf Beauty, this is another beauty and cosmetics stock right here. So they missed on their expectations. So they just acquired this company. If we go to their cash from investing activities, last quarter they bought a company for $600 million. And even after buying them, they still missed on their numbers. So, but it finally went through this quarter. So, well, that was last quarter. Actually, so yeah, you know what? Forget that because they just reported earnings a week ago and I haven't even looked at them. So let's go look at what they reported. So they did beat. They expected 460. They did 489. So they beat on revenue. They beat on net income and they beat on EBIT. So it actually was a triple beat quarter. And again, a lot of this revenue growth was inorganic, but the organic business still grew. So yeah, 489 mil of revenue, and on that they netted around $50 million. So yeah, they have around a 9% net margin on average. Yeah, it's actually not that bad. So yeah, that's why their balance sheet, like or assets, changed so much this quarter. It was because of this acquisition that they did. So actually, it wasn't that bad of a quarter. Actually, it was actually a good quarter, according to the analyst, based off what they beat. So yeah, look at that. Check that out on the right. Elf Beauty's at a 27 forward PE. That's actually very cheap for Elf. 27 forward PE. Not too shabby. Actually, they've gotten really cheap. We were just looking at another beauty and cosmetic stock. I forget the ticker symbol for it, but we were just looking at some other one a minute ago. So Redwire. And what are your thoughts on VKTX? We'll probably check that out as the last stock, Viking Therapeutics. I still don't think they have any revenue yet. So thank you, long-term hold. Yeah, hey, what up, 1961? Yes, sir. Lamb Research was really good. And what up, Travis? So here's Redwire right here. I think this is another drone play. You're right. I think this is the one that makes the like Black Widow drone that got NATO approval. And they're just now getting their first ever or no, I'm thinking of a different company. But this was a record revenue quarter. Revenues at I'm thinking of Red Cat. So this is Redwire. I'm thinking of Red Cat. Okay. So Redwire has good spacing in play. Okay, so anyway, Redwire revenue hit a record. I think it might have been from an acquisition. Let me go check. So yeah, if we go to their cash from investing activities, they spent, $160 million buying a company. So that's why their balance sheet changed so quickly that quarter because they bought a company. But they are not profitable. They're still losing. past 2 quarters specifically, they're losing like 30 to 40 million a quarter. So we do want to see them narrow those losses, not lose that net income. And they did miss, like analysts expected 133. They only did 103. And they've actually missed like on the quarters before this as well. So that might be why the stock is like just not is not able to catch a break. The momentum just keeps falling because the fundamentals seem to just keep on missing over and over. So that's the unfortunate part about Redwire. Space and Defense Technology Solutions. I think I'd maybe rather buy a Red Cat. I think it's RCAT Red Cat Holdings. This isn't the drone play I like. Yeah, this is the one that has the Black Widow NATO approval drone that got a big, has crazy backlog of orders. So VKTX, so Viking Therapeutics is the last stock here. Then I'll do a portfolio update, then I get out of here. Again, if you wanted to follow button, we stream every Sunday this exact same time. And I try to stream every day and I sell nothing. So Viking Therapeutics, the reason the stock gapped up this day, it had such a crazy rally is because they got FDA approval. They got FDA approval for their prescription. Like this, I'm on the weekly chart. This isn't a long time ago. And ever since that day, they were expected to make revenue, but they still have not sold a single thing. We go to revenue right here. It says 0 because they've never sold anything. They've never sold a product or a service. So we click on revenue. It says no data because they've never sold anything. And in the meantime of having no sales, look at these losses. They're getting worse. They lost 150 mil in net income this quarter, 90 mil, 60 mil. Like this is not what you want to see. Like that's the worst amount of net income losses they've ever had, plus no revenue. So whenever you lose net income like this, that money has to come from somewhere. So look at their assets. It just declines every quarter because they're losing that net income. So their cash pile is just being depleted every quarter. So luckily they're not in a terrible position because they still have, 700 million of cash and no debt. But we really need to see them narrow these losses and finally sell something. And the analysts don't see them selling anything for the next 6 months. So that I think explains why the stock has just been down for the past couple months because they just are not doing as analysts thought. Did you look at PD? That's what I've been wanting to know. Oh yeah, we did. We did a deep dive on PagerDuty earlier. It was when you first said it, Michael. I don't remember when that was, but unfortunately you have to go right now. But I bet if you, it's kind of be hard to find because I don't remember how long ago it was, but I did go over PagerDuty. It's like a little deep dive into them. Yeah, I hope you guys have a great rest of your Sunday. Let me end this off with a quick portfolio update. So here's my Robinhood portfolio. This is known in the top left as my dividend only portfolio. Every stock in here does pay a dividend. Year to date, we're up 0.8%. So, but most of these are like dividend growth companies like Google and Meta, United Rentals, Constellation Energy. Here's my total percent change in every stock. So luckily we are up. We are green on every holding in here. We also have a Roth IRA. I'm trying to build this up. It's only $6,000. It's not done too well. We're down 3% year to date. But here are the stocks that we own in here, like Cavco, HCA Healthcare, Cormedics, Webull. We're down bad, like down on Webull 30%, Cormedics. And then we have our Webull, we have our Webull portfolio, which is also not done too good lifetime. We're only up 6.56% all time. So definitely not great, but here are all our largest holdings at the top. AMD, Futu, which is Moomoo, Disney, UiPath, Progressive, Southern Company, Sprouts Farmers Market, we're down bad on that one. AbbVie, Zoom, we're down bad on. Reddit, SoFi, Robinhood. Oh, Iron Mountain has done surprisingly well. It's that REIT with like a high dividend yield. And then finally, this is my best performing portfolio, my buy and never sell in the top left. So once I buy a stock in here, I never sell it. And somehow, I don't know how, but the past year, we're up 140%. And year to date, we're up 30%. If you're wondering how are we doing so well, it's because of our largest two holdings. So check out Comfort Systems right here. I mean, just unbelievable. Like every day, here's my buy orders down here where I bought it. It's just been up and to the right, almost like a straight line. And that's why we're up so much. And Powell Industries as well. Oops, wrong stock there. Powell Industries. Yeah, this one is also at a crazy all-time high. We bought this one back here at $77, and now it's $580. So that one's been incredible as well. And Amazon, this is my latest purchase. We're only up 0.7%. So this is my latest buy, never sell, huge purchase. I bought $1,200 of Amazon stock. I'm really bullish on this one in the long run. I literally cannot believe how cheap it is. Out of all the stocks to buy right now, I think this is one of the best buys at current prices right now at a 25 forward PE. So that means they traded 25 times next year's net income. I mean, just super good valuation on there. Then we got Amphenol, another AI beneficiary. Like these are all in the, or most of these are in like the AI ecosystem where they're all beneficiaries of the major capex and the Mag 7, like Amazon, Google, Meta, Microsoft. They're all spending crazy amount of money in 2026. That's all to the beneficiary of like Amphenol and Palo Industries, Comfort Systems, Constellation Energy, the picks and shovel space. So anyway, hope you guys have a great rest of your Sunday. Wookie, Travis, Blair. Oh, my bad. I have to go. I have to be somewhere in 4 minutes, so I do apologize. But we'll check out Draft or DKNG and Coinbase in the next stream. We'll definitely get to them. I hope you guys have a great rest of your day. My bad. Dang, we made it. We're live for 2 hours and 20 minutes. So thank you all so much for being here. And thank you to everyone on the YouTube stream the most. Make sure you hit the like button if you haven't already. It does help me out. Oh, no. Hey, my bad, John. I feel bad. I'm ending it right as you get here. But, thanks again for being here. If you haven't already, please hit the like button. And subscribe if you want. We stream every Sunday this exact same time. And I sometimes do 2 streams. I don't know if I'm going to do one later